All right, guys, we're going to be starting in about 30 minutes or so with Nic Chahine. We're going to be talking about options, markets, current events, things that are happening as traders that we need to adjust. So, just wanted to give you a quick heads up if you're here. We'll be starting in about 30 minutes or so. Thanks for being here today with us, guys. All right, ladies and gentlemen, thanks for being here with us today. We are going to start the day here with Nic Chahine, options leader at the Options Inner Circle chat room. He's with us today. I believe he's in the building now. Let me just double check that. I think he's already in.
He is.
Okay. Hey, Nick, what's up, man? How are you?
I'm doing well. I just hung up the webinar for the chat room members. So it
Mhm.
was 2 hours long and 125 tickers
Just for the session?
just for one session. If you don't believe me, it's in print. It's right
Yeah.
there. It's all of these stickers.
You posted on the chat room as well, correct?
Yeah. Yeah.
Okay.
That was in the chat room as well. Yeah.
Good stuff. Well, we have a good amount of people here on the Zoom conference. Go ahead and let us know where you guys are tuning in. We always want to get a good feel to see where you guys are checking in from.
We're already international. Borders north and south of us. Boom. Israel. I'm from Lebanon. We're neighbors. Yay.
Yeah, it looks pretty good. All right,
Singapore. Nice. Lebanese there. All right, Roddy.
Jamaica, Elmas, Germany,
Wow. All over the place. Sweet.
Holland. Yeah, man, it's definitely. I mean, there's people like checking us out at midnight here, somewhere else. But all right, that's
Italia.
interesting. All right, guys. So let's switch it up here and just let us know what is your biggest concern in the markets right now, so that we know, how to tailor this for you guys. What do you think is the biggest theme impacting the markets today?
Dubai. Nice. No picture. Yeah, no picture yet from me. So I haven't shared my screen yet. I can. I'm just waiting for the boss's permission.
You're good. You could switch the screen, man, anytime.
Okay. All right.
Yeah, from the get-go.
No, I'm not gonna do it.
All
Sharing
right.
screen. That's a creepy picture, by the way. That's up there with the. Anyway, it looks like a Benzinga team member. He shall remain nameless. Okay, so you're seeing my screen now. Let's go back to the SPY. Transparency. Okay, hyperinflation. We're nowhere near hyperinflation. Nowhere near it. Call the people in Lebanon. Talk to them about hyperinflation. That is not hyperinflation. Okay, earnings from supply. Okay, I get it. Fed indecision. Decisive Fed. They're bullish, bullish to the moon. They're not indecisive. They told us what they're going to do in the next 3 months. So we'll
Do we
talk about
know?
that, Greg.
Do we know if they're going to change Powell yet, Nick? Have you looked into that
Oh,
one?
that part. I think Biden would be an idiot to replace him. Not because Powell's great, Powell's horrible, but because that's what markets doesn't like. Um, Question marks. You bring the name of somebody else, or hey, this guy is not going to be there, then that's a whole bunch of question marks, and then they'll have a little tizzy. Yellen wants him. Everybody else wants him. The IMF want him. Why on earth would Biden want to choose him? Choose somebody else? So okay, so I see you're into your fears. So I'm here to allay their fears, to tell you that I'm looking for dips to buy. That was the message of my strategy video, which I also just shared in the chat room for next week. So I shared a 2-hour video for tickers, and the tickers that I shared are in a table like this. You can click on this, you'll get the chart for it, and the table is 126, 125. Well, there were three that came in during the chat room. So this is 422 and 3 or 4 that came in through the chat room. So let's call it 125 round numbers. I'm looking for dips to buy. And the video was 10 minutes, the strategy for the week. And that's the theme, looking for dips to buy. So which one do I buy? Dips. The very fast one on Monday, Tuesday, Wednesday. It all depends on how fast of a trader I am. Notice I said trading. I didn't say anything about investing. So let me show you first. The S&P. This is the daily chart. Up here, it's not an entry point for investment for the long term. It is not an obvious entry point. So you're bearish, Nick. No, I'm not. I'm saying if my mother, who's 90-ish, comes to me and says, I want to invest my nest egg, invest. in the stock market. I'd say, Mom, the stock market has never been higher. Right now, investing for the long term is not a good start. You can find bargains within it that you can nibble on. Why not all in the bargains like PayPal, for example? Because if this has a 3 or 5% dip, PayPal will fall as well. Find a new low. So whatever I'm buying dips on, I should be very selective and I should be not all in. Okay. Major correction? No, you're not hearing what I'm saying. So I said, I am looking for dips to buy. Therefore, I am not looking for a major correction. What do you call major correction? This was less than a correction and everybody lost their mind. This was less than a correction and everybody lost their mind. I don't think this was 10%.
Nick, did you already go ahead and ask your major question here? What is risk or something like that?
Oh, no, not yet. We'll start with that in a second. So I'm just following up on what you said. You wanted to talk about the fundamentals. Here they are. Here's one fundamental. There's so much money in the economy that all we know about the rules of supply and demand may or may not apply. So we infused 5, I'm rounding, and boy, rounding is 2,700 year mistake at this point. $5 trillion. It's maybe 3, maybe 7, I'm not sure. Let's say 5. That's so much money. So we have inflation. Everybody's surprised. How are you surprised? So inflation is not the problem. The inflation becomes a problem when it stops me from buying stuff. So example, if I go to Costco, which I did yesterday, I looked at milk. It's about 50% more than it was a few months ago, maybe last year. I still bought it. Hyperinflation is different. My mother lives still in Lebanon and they have hyperinflation. So you wake up and gas is 3 times the cost of yesterday. That's hyperinflation. No joke. In fact, gas jumped up so much one day that people that have a job cannot afford to, the measuring is the 10K, which is 20 liters, I think. That's what people refer to as the gallon there, is as much as the wage for a whole month for somebody working there. Overnight, that happened. So that's hyperinflation. We're nowhere near here. So spending has never been higher. And spending in the US, consumer spending, is 2/3 of the economy. So as long as you and me, people in the US, are spending like fools, there's no problem from inflation. The only problem is the headline that it makes that cause bonds to fall and yields to rise and the dollar to rise. And then that puts pressure on gold and oil and other things priced in dollar and puts temporarily downside pressure on stocks, although that is not a rule. It just creates sentiment trading. So let's break it down as to what markets need to rally. What the stock market needs to rally, basically 3 things. 1, structure. So since we have nothing broken, we have structure. Therefore, that's not a problem. 2, money flow. We have never had this much money in the economy ever in the history of personkind. Yes, the Fed tapered, but taper means less than what they're putting in. It's still an added. So the QE continues until the middle of next year at least. So that is ample money. And the third thing, which is the only thing that's moving stocks up and down right now, the only true variable is sentiment. The trader sentiment, that's it. Not consumer sentiment, trader sentiment. How Wall Street is reacting to the headlines. That's the only thing that's flip-flopping. Nothing changed from last week to this week. The only maybe hint of a change is the lockdowns. That's not part of the thesis, locking down. And I would be shocked if the US locks down. Shocked, because we just cannot afford to do it. We spent so much money trying to reflate it. We don't have enough to reflate it again. There is no way. Let me ask you this. What comes after $1 trillion? It's such a high number that most people, if you ask them on the street, they don't know what the number is after the $1 trillion. Okay. I know a lot of people are smart in here. There you go. Jermaine knows. 90% of people don't know. I asked it in every get together I got together. Every time I have more than like 10 people in a room, say, what comes after a trillion? Most don't know. And if you don't know, good one, Neil. If you don't know, if you want to put it into context, spending $1 million a day, for 2,740 years will get you to a trillion. That's a lot of money. So anyway, having said that, scam likely. How do I read it? There we go. Okay. So having said that, my view on Wall Street is I'm looking for dips to buy until I learn something new. Recently, I learned nothing new. The Fed's into tapering. There's no way they're going to raise rates next year, in my opinion. And if they do, maybe one. But for now, talks of rate hikes, if they change, now they have 1 or 2 baked in the headlines. So if somebody comes out and says 6, that's not baked in. They'll have another tizzy. If somebody says none, then we get a relief pop. You don't chase. So I'm looking for dips to buy. Okay. No slides, just talking. You don't see my screen? Tony, you're looking for slides. I can do slides. Slides are easy. I'm sharing my desktop. Somebody answer. Can you see my screen? Yes, thank you. Okay. So Tony, that's my screen. I will start talking once we get through the hello, how are you? Thank you, thank you. Okay, so let me know who in here has put a 1 only if you've never done options. So you're like basically from nothing. 1, yeah. New, 1. I don't want to know if you know it. I know a lot of you know it. I just need to see how many 1s there are relative. Okay, so it's a good chunk already, which makes it easy. So what I'm going to 0. All right, Donna, I got you. Alyssa, brand new, I got you too. All right, so let's go through from the very basics. But first, I would like to discuss risk. Okay, and people, I'm going to ask you something. If you were teaching a class, how would you define risk? And I'm going to tell you, I'm not expecting anybody to say it the way I want it said. So I'm confident that all of you will get the biggest part of it right, but very few have ever done the whole thing the way I want it to. So I'm going to bring up a scratch pad while you try, give it your best shot. Amount that could be lost. Greg hit the nail on the head. Okay, but that's not the whole definition. That's an important part. 3-to-1 risk reward. No, that's your parameters, Scott. Okay, willing to lose. I got that. Okay, see, everybody gets that. The unknown. Shufi mafi hatim. System risk. Minimize your exposure to losing. Amount you can afford to lose. See, we have everybody's getting the same, the negative exposure, lose half. That's your bar where you call it quits. I get it. Holding on to losses. How much? Okay, I know what you mean there. Unknown, not a guarantee. Okay. Easy to get sucked in. John, we have tools to beat Wall Street at their own game. Boom, David, stop the presses. The probability. Now we're talking. Okay, I've seen enough. I'm confident that after we talk about it here, you will have a different perspective on, it's like an aha moment, a mini aha moment for all trading, options and otherwise, even in sports, even if you're playing poker, even if you're, making the decision what restaurant to go to. So risk is usually, for me, the way the best lay it out is in 2 pieces. One, everybody nailed it, is how much can I lose? The consequence if I'm wrong. What happens, worst case scenario? All of these. Okay. So how do we make it a calculated risk? That's the point I'm getting to, Wendy. So number 1 is how much can I lose? You sit down, you think it to yourself. If you're single, if you're not, you talk to your family and say, okay, I'm okay losing X dollars on this particular trade. You decide on that part and you move on. That's not the part I manage. When everybody says manage risk, the part you manage is what are my odds? Okay, what are my odds of winning or losing? That would decide whether you take the risk or not. So let's put it in terms of jumping. Somebody says, hey, let's jump this gap right here in front of us. The first question I would say, let me see how deep the chasm is below it. If I'm going to just twist my ankle, that's fine. But if there's like, I can't see the bottom, there's no way I'm jumping. And the second part is, what are my odds of making the jump? If it's 3 inches, okay, I'll take the leap. If it's 3 feet, maybe I'll have to think about it, you know? So if you're not willing to lose anything, then you shouldn't be investing at all. That's my advice to you, because that's an unrealistic expectation to not lose anything. So there are ways to set a specific loss amount and nothing more. And that's what options opens the door to. And it's a lot smaller than what you can do with equities. However, you need to do it smartly. Otherwise, you can lose a lot less, a lot faster, and end up at a worse situation. So first part, easy. How much money can I lose? You can decide what it is appropriate for you. Then you set it aside. Then you tackle my odds. So I bet everybody in here has rarely picked a bad stock. Usually the mistakes happen or the pain comes when we have unfortunate timing. We're either too early or too late getting out. So that would bring about this question of, what are my odds? So let's say you do homework on a stock and you decide, ooh, I see something that most people don't. Like last year, I saw a thesis. It's not bad execution. Sometimes it's tough luck. So last year, I did homework and I had a thesis on GoPro. I said, I want to be long GoPro going into the year. And because my thesis was that, hey, everything is going self-driving in the future. We're going to have drones flying all over the place. So why not invest in a company that has the best eyeballs in the business? So I thought to myself, somebody might want to come hold hands or buy the company to get its technology, camera technology. Yes, LiDAR is fine. Laser is good. But in the end, you're going to have to see whatever is in front of you face to face. So you're going to need eyeballs for self-driving this and self-flying that, and machines that help themselves. So the idea is I assign myself, nobody's looking at this aspect. I give myself a percent. Okay, I have the edge, a little bit edge, a lot of bit of edge. In my case, it was a humble edge. And luckily, it wasn't a lot of money to take the trade. And super luckily, it exploded into the year. And it was my biggest win of the year inadvertently. So I had a percentage in mind. Let's say things developed. And then suddenly people were saying eyeballs are not the way to go for self-driving. It's for sure it's going to be LiDAR. And then I'll change my mind. And then I'll say, okay, my percentage changed to a point to where I no longer have an edge. I thought I had an edge, but I lost it because I read the science behind it. And I'm making up a conceptual scenario here, the second part. I have not read such a thing. I'm just saying what would have changed my percent in my head. My edge is gone. So now I'm down to a coin flip, and that's not acceptable risk. When you buy a stock, if you don't know why you should have the edge, then you're hoping for a coin flip outcome. Okay, so therefore, I don't have an edge. In options, luckily, this number is given to us on a piece of paper. I can open the platform and I can see it. There it is. If I choose an options trade, I know exactly what the statistical odds of it succeeding or losing are. So how easy is that? I decide how much I want to spend, and then they can tell me what my odds are. And then all I have to say is that, you know what? When my edge is no more than 20 points on my opposite side, I want to get out. Meaning if my odds of success are below 70, then I'm too close to a coin flip. 50 is a coin flip. I have no edge. My opponent and I are at equal ground. I want trades where I have the edge. So if my odds are less than 70, I don't feel comfortable. That's personal preference. So now I can see it in the options. So now I have a thing to use to manage my odds and take the risk off, win or lose. Okay, so that's the advantage of the options. When doing equities, you have to do homework and pick that number in your head, which makes it more difficult. However, you can use the options data, even though you don't trade options, to make that decision. So if I own equities and I want a stock to go to 12, and if I go into the options table and the 12 has got a delta of 5, that's not good. So it means I'm smoking opium. So that's just one example. All right, so we defined risk. So let's jump into the options tables and see if we can define the options for us. We'll get to that, Bill. So I have an options table in front of me here somewhere. This is E-Trade practice platform. I'm not recommending it. They're all crap. They're all good. Depends on what you like and what you get used to. We'll go to January. We're sticking with, this is PayPal. I'll keep it here. So first of all, what is an options table? An option itself is a contract. I know there's so many terms in your head already. They're getting bombarded. Puts, calls, bullish, bearish. What did it? Puts are not bearish or bullish. Calls are not bearish or bullish. What do you do with them? There are two types of contracts of options. What you do with them actually makes the trade bullish or bearish. And even then there are nuances, and I'll get to that. So first of all, let's establish the fact that options are contracts between a buyer and a seller. So I don't need shares to buy an option, and I don't need shares to sell an option, but I better know what I'm doing, because I'm committing to something when I'm selling options, and I'm buying the right to do something when I'm buying options. So the buyer is in control. The seller is at the mercy of the buyer. That's a rule. So when I buy an option, I have the right to do something. When I sell an option, I am obligated to do something if the buyer asks me to. You get that concept? Okay. Now, I'm going to explain the put side from the protection angle, right? So they are contracts. They have a buyer and a seller, and they do have expiration dates, just like any contracts. There's one that expires in 7 days, 6 days, Friday. One expires a week from that, and a week from that, and a week from that, and a week from that. And there are some that go out to 2024, January, and January 2023, January of next year. So you can go out in time, you're going to go very, very short. What's the advantage of going very short? If you know your stuff and you're trading fast, you can make a lot of fast money. What's the disadvantage? You get it wrong, you lose all your money in 7 days. So if you're not good with charts, stop messing with these, please. Okay. People who are good with charts, they can take you to the cleaners. If you don't know how to trade charts, do not do these. That's my opinion. If you're in a chat room with somebody that knows their charts and you know what they're saying, then maybe you can do that. So let's go with January, and I'll click on it. It shows me a set of contracts that have 61 days on the clock. There are more than this. I'm only showing 10 on each side. If I say 20, they'll show more. Okay. So this is where current price is. That's where the price color changes. I mean, the shade changes. Okay. And current price is 200 and change. 200. Wait, why is it? Oh, 193. I'm sorry. So price is right there between 195 and 190. You see those two? Okay. This side, they're called puts. All of these are puts. All of these are calls. Now, every line is one contract. When I say all of these, there's one contract at 150, 155, 160, 165, and so on. And then the call side, also, they are from here to here. So this is the price. So we have a put at all of these price lines, a call at all of these price lines. Okay. So they're contracts. We know that. Buyers and sellers. We know that. They have a time limit. We know that. The lower time frame ones, like the ones for this week, they would look the same, only different lines. They're more active. You have every 250, you have one. And they only have 5 days on the clock. They're a lot cheaper, but they die so much more, so much faster. So let's go back to January. So what how can I use a put option? Who can use a put option? People say they're bearish. They're not. I'll tell you why. The typical definition of an option on the put side is that if I wanted to, quote, protect my stock, I buy a put. Okay. So let's say I own PayPal shares and I want to go on vacation and I don't want to worry about the next 60 days. I think the market's going to crash. Somebody said hyperinflation. The market's going to crash. So I can protect my stock to a degree by buying one of these things. So how does that work? I'm going to go to randomly. This is not a trade recommendation. This is the explanation of what is a put. Okay, so if I buy a put, this one at 165, so that gives me, the buyer of that put, the right to sell shares at 165. So how does that work? Let's say the stock crashes to 150. The seller of the put, somebody who sold it, I'm buying it, somebody's selling it. There is somebody on the other end. I'm not buying it off the shelf, by the way. Okay. The seller has the obligation to buy my shares at 165. In fact, they would wake up one day owning my shares if I say so. Am I obligated to sell my shares? No. Think about it like you buy insurance on your car. You have a fender bender. It's $300 to fix. You're not going to file a claim because your deductible is $500. You just fix it yourself. So you have the right to file a claim, but you choose not to file a claim. Maybe you hang on to the dent for a week and then you file a claim. Same here. There are 60 days. If you see it dip to 160, you're not going to rush out and sell your stock because you're guaranteed a sale at 165 and you have 60 days. So in the next 60 days, if it recovers and comes back up, hey, you didn't even need to file a claim and you still have your shares, right? And you still have the policy. So how does that work? If I bought it, means somebody sold it, and then 2-3 weeks go by and then the stock collapses. I come to my broker and I say, please sell my shares at 165 to this person because I own the put. I exercise my right to put the stock to them. So they wake up, their position disappears, the sold put disappears, and in replacement would be the shares. Let me show you a visual of that. So I practice on this. I do presentations, and at some point I had positions. I don't freaking remember where they came from. So let's take a sold put position. This one. This is Zoom. I sold one put that expires in December at 230. How much is Zoom now? Wherever it is. Anyway, we'll check in a second. And so I collected $7 for it, which means that's $700. By the way, every contract on this platform or any platform represents 100 shares. So if you see a cost of $7, it's actually $700 because it's per share. Okay. So I collected $700. You can see it right here, minus $700. Why is it minus? It's a credit into my account. So if you're an accountant person, it's a liability. Like I collected from somebody and I haven't performed, so it's a liability on my books. So anyway, it's a credit that goes into my account. When I sold it, no money left my account. I collected $700. In return, I promised to buy shares of Zoom. Let's put a picture at the put level I sold, right? So Zoom has had a tough time of late, right? And if we go back to that, I said I will buy them at 230. If I go to the chart, 230 is right here. So if I kept the put open, that means I'm still on the hook for another 26 days. And the trade itself is showing 8.2. Okay. And so what happens now is I have to weigh the pros and cons. I chose a loss of 120. So it looks like I'm losing money, but in essence, I haven't. And that's the nuance that we discussed in the chat room all day. And the nuance I put in the video that I share when I share a setup like this one. So when I share a setup on going long via an idea like this, I would have said what to expect in this scenario. So somebody will jump in and chat, I took this trade, what do I do? I was like, first of all, you should have known what to do. Before you took the trade, I gave you ample information, but let's delve down into it. And we go with the back and forth, and we come to an agreement as to, hey, do I still want to own shares? Right. And in this case, I like the company. I think they're growing hand over foot, however you say that. They're going fast. And they have the opportunity to tell us, to confirm that within the next earnings report. Now, the earnings whipsaw action may have nothing to do with actual fundamentals, so they could still drop it a little more. So what can I expect? I actually had that conversation in the chat room last week. I sold the put, but now I'm worried. I was like, did you want to own shares at the 230? Yes. Then what are you worried? Let me walk you through what happens. So they're on the hook right here at 230. Let's say the stock falls to 225, 222, whatever, 220 if you want. So the buyer of the put now becomes enticed to exercise the file a claim, basically. So I may wake up one day having 100 shares of Zoom. So what happens to the losses here? Right now, it looks like I'm losing a lot. $120 on a basis of 700. That's a big percentage loss. Yes, it's on paper. And the only way I realize it, if I close it, if I say, okay, I want to close it, I changed my mind, and now I'm losing $120 when on my base of 700. That's a big loss. But if I don't, and I let them give me the shares, that position will disappear, will go away, take all the losses with it, and in the replacement of it, I will have a fresh batch of Zoom shares. But you're saying, but it's at 225. You've lost money. You bought it at 230. I did not lose money. I collected 7. So my break-even point is 223. So if this happens, I don't realize those losses. They disappear. I'll get the shares. I have this much of offsetting. So my break-even point is 223 in this case, right here. So if I hold my shares past 223, then I start losing as if I bought the shares up here. But I missed out on all these losses. I only start losing below 223 when I get put the shares. Meanwhile,
for all you guys that are asking about how to join the chat room, I'm going to drop the link in the chat where you guys are talking right now with Nick. That will expire tonight. It's the full chat room 24/7 with Nick. It includes the weekly live sessions, everything that he's going over now. That's what he does every day in the chat room and on the weekends. I dropped the link there for you guys.
All right. What you heard there was C4 energy drink. It says superhuman performance. I sure hope so. All right. So currently Zoom is at 250. If it falls to 223, I merely break even on this trade that shows losses right now. So if I'm willing and able to buy Zoom shares, I could sell puts. Otherwise, I would never sell a put of a stock I don't want to own. So this whole thing is to define the back and forth of what is a put and how it works. So let's go back and reset what we just said. They are contracts. They have a buyer and a seller. I just showed you me, the Zoom seller. What was that, December? That is me, okay? So why is this easier to profit with than buying stuff, buying shares, buying calls, buying call spread? Well, let's go back to Zoom, okay? That's a funny thing there. I'll talk to you about that for a second. So the alternative was, at the same time, I bought a call spread, meaning that's a trade that requires a rally, just like buying shares. It's an upside hope rally. It didn't happen. The stock fell. That trade is decimated. It's down to 25% of its value. And unless Zooms goes to 310 pretty quickly in 26 days, it's toast. If somebody hasn't stopped out yet, they don't have a system, because I shouldn't let the trade go down to its 25% of its value and not do anything about it. But that's a different conversation. These two trades happened at the same time. This one needs a crash from here in order to lose money eventually. This one needs a miracle. So this is why the selling is an easier way to profit than buying as long as you know what you're doing. So somebody brought up, I'm tying up a lot of money. So let me debunk that by two things. First of all, sure. Second of all, I can modify it to a credit put spread where I'm not. So besides, if I wanted to buy 100 shares of Zoom, I have to buy 100 times $260, which is more money than it ties up selling a put. So any which way you slice it, selling risk below current price is an easier win than buying upside hope. That's a fact. You can argue with it all you want. Okay, so this is the visual as to selling risk below that is currently under fire, meaning it shows $120 loss, but that loss will disappear in 26 days if two things happen. One, price doesn't get there and I don't get put to stock. Then this $700 just dies for maximum gains into my favor. You know, you've heard the term, most options expire worthless. That option, if it expire worthless, I win. What did I win? $700 per contract. It's like I bought the shares and they rallied $7 and I didn't have to spend anything out of pocket. All I said, I will buy your shares and I made money. That's all I said. Versus buying upside hope and needing a rally and the rally didn't come, I lost my money. Miracle pop will give me my money back. Disaster scenario could cost me some money. My break-even point is down here. So 223. So that is buying and selling a put. I sold it for the buyer who has a leg up on me right now by a little bit. Now comes to somebody asked, what are my odds? Remember how I said how much money I can lose? The second part, I manage my risk. Where are my odds, right? So my odds are the delta. So you've heard Greeks. I haven't said a word of Greek yet. This is the first one. You can go spend weeks studying the proper definitions of what theta, vega, gamma, and all of that bullshit is all about. Or you can put logic to it, start from the basics, nail the basics down to where they're instinct, and then you can go delve into the other stuff and see if there's systems that could help you, quote, trade the action. Otherwise, you don't need them. So just know a couple of things. Theta is a fancy word for time, and know that if you buy an option, theta is your enemy. Time is your enemy because you're buying a contract and time is going to run out unless something happens for you to make money. That's it. It's as simple as that. You're buying a contract and you need something to happen for you to make money. That's why sellers win more often than buyers. Delta is my odds maker. If I can keep one thing, it would be delta because this is where I can manage my risk. So I sold that put. Right now, that put delta, right there, column, shows 0.28. So roughly, I have a 70% chance that I'm going to come out on top. That put, there's a 30-ish, little under % chance that price will be at or below 230 in the next 26 days. Now that's pretty freaking low considering that they have a big event coming. So that event is a big question mark, right? So that's risk, temporary risk. I have no doubt that the company is worth it. It's growing fast and the price to sales is about 20, 21. That's down 100 points from last year. So they should do well. So that is the odds maker. Let's say, look at the price, the delta at current price. So current price is 250. The delta is 0.45, almost 0.5. What is 0.5? Can somebody put it in plain, simple English? An odds of 0.5. 50%. Coin flip. Vegas. So yes, flipping a coin. Exactly. So I have no edge if I sell or buy anything here. It's doable. But if I sell something down here, the edge is in my favor. The odds are in my favor. There's very little chance. So this says, look, 0.04 delta. There is almost no chance that Zoom will be at 180 in the next 26 days. I said almost because if that was true, there would be no reward as well. But in any case, if you're willing to buy shares of 180, somebody's willing to pay you $100. If you say, I would buy your shares at 180, they'll pay you $100 today for the next 26. That's a cheap insurance for them. and maybe cheap income for you if it depends. But I wouldn't sell that put unless I want to buy the shares. Okay, that's how people blow up their accounts. They commit to things they can't live up to. In this case, if I have no problem buying 100 shares of Zoom at $180, where is $180? Down here, right here. So technically, this is doable. That looks like a nasty inverse cup and handle, whatever you want to call it. So technically, it's doable. If markets crash, this will go there. So there is a chance, but a low chance. It's like Dumb and Dumber. So you're saying there is a chance. So 50-50 odds are no good. But the lower I go, the lower the odds are. So the seller gets the upper hand. Up here, nobody has the upper hand. The seller gets the upper hand because the buyer needs price to go there for them to benefit from that. So you're saying buying is bearish. Not really, because if that person that bought the put, if they really were bearish, they would have not protected their stock. They would have sold their stock if they were really bearish. Yeah, that's what I was talking about. So it is any which way you slice it, you can word it differently. All I care about is that particular trade. Is it going to make me money or lose me money? Whether bullish or bearish, who gives a rip? And then you see options, unusual options activities. Please don't get sucked into that. It's a big conversation that we debate in the chat room all the time. Okay, so those are two conflicting things. They first tell you most options expire worthless, and then they focus your eyeballs on the one that has the most counts. But they just told you that's the one that is likely to lose because that's, quote, most options for that particular spot, right? So it doesn't make sense what they say. Do your own homework, find your own unusual situations and trade those. Otherwise, you're going to buy Mr. Nigerian's winnings. So tickers to play. How do I identify tickers to play on? So that's a different conversation. The easy answer is, if it was up to me, I would have like 12 tickers in my watch list and specialize in them and not mess with anything that's not very liquid. That's all there is to it. So if you see one that doesn't have weeklies, that's not the one. All right, so back, focus on the definition. So now we should have a better understanding of what a put is. It's a contract, buyer and seller. The buyer of the put holds the cards. They have the right to file the claim and exercise their right and get rid of their shares at that price. The seller, me in this case, I'm on the hook. I have to buy their shares at 230. I can't back out. The only way for me to back out is to pay the value of the contract to get out of it, meaning somebody else buys it off me. Well, I paid $700 for it. It's going to cost me $820 to do that. So I book a $120 loss on the base of $700. That's not a happy thing. But it's good if I decide that, oh, shoot, that's going to be a disaster. Earnings is going to go to 195. I'll try to make my money down there. Viable action. Okay. So, but the worst case scenario is I break even at 223. Somebody will do the homework and say, hey, I'm okay with that. So those are back and forth. This is not a trade recommendation, especially not into earnings, and especially if you've never done it before. That is high risk stuff. High risk stuff. First time into earnings on a stock that's volatile, you're asking for trouble. I hope I scared enough people away. There are other ways to do it. Hit me in the chat room. By the way, as far as a selling point, the best part of the chat room is the fact that it's a learning experience for everybody in it, including myself. I'm learning about crypto from people in there that are unbelievable crypto traders. And it lasts all year at any point in time. So if I pop in here, there's probably somebody in there. I just posted 2 videos in there and links, and they're not supposed to be in here that Sunday, but they're in here. Somebody said, I'm new in this, trying to find a chat, whatever. So somebody will help them out. I just joined today, trying to find. So I will address them when I get there. But in the meantime, it's a setting where we're learning every day. So every day, and remember this part, when we get to charting some things, I'm going to get like bombarded by tickers. And when I don't put it, they're going to be capitalized and please and all of that. That's because everybody wants to discuss charts. Well, that's what we do all day, every day. So if you think that has value, put that into the equation. What if you had access to pretty good charting skills any time of the year on any trade, and on top of it, opinion on the options trades that you're thinking about or looking for options trades? That's what happens in the chat room all day, every day. To me, that's invaluable. The price tags that Benzinga charges is an insult to me, but I do it happily because it helps a whole bunch of people, hundreds of people. So back to definitions of things. We just did the put side. What is the call side? Okay, let's back up. It's also a contract. The buyer is also in control. What does the buyer get for their money? So this is a December contract that has 26 days. Let's say I wanted to buy Zoom because the earnings are going to be fantastic, and I think they're going to say blah, 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 and the stock market is going to love it. I guess it's going to go up. I put emphasis on guess. I want to buy shares. 100 shares times $250, that's a pile of money. Well, in this case, I can reserve my price by spending $1,300. So if I buy one contract, that guarantees me the purchase price, that locks in my price at 260, or if I want to pay for more at 250, pay less at 280. So what do I get for that? I'm guaranteed 100 shares at that price. So what happens? The person that sells it, see how it turned to red? The person that sells it, I'm buying it. By the way, I forbid you from selling naked calls. What is naked? If you don't know what that means, it means you shouldn't be doing it at all. But naked call, like if I don't own shares and I just want to short the stock, I can sell a call. I forbid you from doing that. And nobody in my family is allowed to do that. Because if you understand what shorting is, the traditional way, this is the same. And when I say this, it means that, what's the first rule? You guys and girls all said the right thing when I said define risk. You all said, how much can I lose? The answer to a short position is, I don't know. Infinity. Infinity is the maximum loss. You keep losing for as long as the stock is rallying, whether you short the stock traditionally or you sell a call. But you say, I can cover my call. Yeah, talk to the GME people. They couldn't cover until they went bankrupt and got liquidated, forced liquidation. It's devastating, devastating. So the buyer, me. So you're saying, so who's selling them? There are plenty of people that can sell calls and not have danger. Like if I own shares and I wanted to get rid of them, I'd sell calls against them. Okay. So that would be called a covered call. This would be a naked call. But in this case, I'm the buyer. All I have to do is, if price rallies, then I can call my broker and say, I own calls at 260, please exercise them. And then I am in at 260. It's going to cost me quite a bit to break even because I paid up for them. Right. So that's not a good thing to do, especially not with this stock. I can mitigate the risk. So how do I do that? I'm going to drop a hint at the next level in options, which is doing spreads. And it literally spreads the risk, if you think about it. So I said $1,350 per call is a lot of money to hope on an up move on a headline of which I have no control. So if you think you have the edge here, I'm guaranteeing you're wrong, because you don't. The reaction to the earnings has nothing to do with the actual results. It has to do with expectations. Who is expecting what, and how many people are like this person and then that person and then this person? It doesn't make sense. Moderna grew sales 3,000%, grew bottom line 1,400%, fell 25% or whatever it fell. Other companies, and then rallied. So you don't know. In fact, the proof of it, I always say it, the proof of it is, I can't remember the last time Apple or Google or Facebook delivered a bad report, like a report where they actually shrunk. And but if you look back at the reactions, they're 50-50. So if it's all about the report, they should all be up. Eventually, the report matters, but the headline, like the next morning, maybe the day after that, is all about expectations. So to me, if a company is growing, I'll give you an example. What was a company that reported last week and they worded it like, Alibaba or Baidu, one of those two. They reported the headline. They said shrinking growth or something like that. And I was like, oh shit, they shrunk in sales. No, they grew actual sales 26%. So what the wording said, the headline captured my attention. They grabbed I clicked it. It was clickbait. It was a lie. I clicked it. The rate of growth slowed. What? They shorted Amazon on that concept for a decade. So it's a bad thing. It's only growing 27% or 26%. I forgot what it was. It's not. They probably pushed that number down as much as they can so that they don't piss off the government, because they are under fire because they're doing too well. And so they're underplaying the fact that they did more than 100 billion in one day on 11/11. And now they're going to toot and say, "Ooh, we crushed it 50%, and we're going to forecast an increase next year." No, they're going to say as bad a thing, as humble a thing as they can. Anyway, so perception, you don't know. All right, so how do I spread the risk? I literally make it into a spread. So I buy something and I sell something. So I buy that, cost me $1,300, but then I sell something above it, like this one. That was a spread. Had I done it regular leg, now I lost $300 per contract. I would have lost thousands because it would have cost something like this. But instead, it cost $3.40. Okay. So if it rallies through both, the bad news is I'm limited to, quote, only almost tripling my money, more than doubling. That's not an embarrassment, right? Would anybody mind only a double? No. So, okay, so the idea is to spread the risk. I'm literally buying something and I'm selling something. Could be here, could be here. It's just something to bring me some money against what I'm buying. So on a bad day, let's say the market falls, this one falls, then the pain out of pocket is not devastating. Because if I only did this, bought that, and then the next day the stock falls 2, 3, 4%, this would be down 20%. So I would lose 20% of my money on one tick. Where's the conviction in that? You would get stopped out pretty quickly. But if you had this, the actual pain out of pocket would be much smaller. Then I'm not sweating every tick, although it's disappointing. It's just not devastating. All right, so spreads are better, and it works same down here. All right. So we've kind of have an idea now. What are puts? What are calls? Puts are, they give the buyer of the put the right to sell their shares at X point. Therefore, the seller of that put is on the hook to buying the shares. I showed you my position here as an example. On the buying side, the buyer of the call reserved their rights, so they're bullish. They need a rally to win if they buy a call or a call spread. If I sold the put, I don't need a rally. If it comes, great, I make money. If it doesn't, fine, I make money. If it falls, hey, I make money. If it crashes, I may lose money. Versus if I buy something up here, a call or a call spread, I need a move in that direction and fast. Remember that theta, the time element? In this case, it's only 26 days. Imagine if somebody wanted to commit long-term for the stock. It's going to cost them $3,000 to lock the price for 100 shares at 260. Okay, that's a lot cheaper than actually buying the shares, but that's a lot of money. And one bad tick will lose you 10, 15, 20, 30%. All right, so you saw somebody say in the money, ITM, or out of the money. So what is in the money? At the money is right here, 250. That's where we are at this level. In the money, if somebody bought that call down here, the price has risen through it. So that call is in the money. That call is out of the money. The money, out of the money. Price needs to rally up more for it to be in the money. This one is in the money. So what's the difference? Look at the delta. So if I buy a call up here, 340, the delta is under 0.1. So there's like a 7% chance, only a 7% chance that this could happen in the next 20-some days, 26 days. Okay, so that's out of the money by a lot. So most of this $1.40 is made up of hope. Okay, so I don't have a lot of meat in here. So the delta is it's so low. And if I go down here, the delta is almost 1. So if I buy it, because that's almost a guarantee that it's going to be in the money in the next 26 days. So it was going to take a crash for this stock to be below 180. And that call is at 180. That's why it's so expensive. So what's the advantage of owning an in the money call? The definition of delta is how much the option will move relative to the price change in the price of the actual stock. So in this case, it's almost 1-to-1. So if the stock moves up or down, this one should move about the same as the stock. So it behaves well like the stock. So if I buy a call up here out in time, way out in time in 2022, and I buy it deep in the money. You've heard that term, deep in the money. That's deep in the money, to where the delta is almost 1 or close to. It's 0.9. That means on a bad day, the stock will be down, say, 3%. These calls will be down 15, 20%. The calls down here will be down more like the stock, a lot less, because they act like the stock. Most of the value in this thing is meat. It's actual stock, versus this one, it's not stock because the price is still down here. They call these extrinsic value and intrinsic value. This one has a lot of intrinsic value. This one is mostly hope. So that's what the difference is. Why people say, oh yeah, you can buy an in the money call and be the safest, because it's almost as good as owning shares, but not a lot of money out of pocket. So it behaves well on bad days. So that's the difference. So now we're getting into terminology. Just know that the definitions are basic. And here's I've said it already, but you probably missed it. They don't take them off the shelf. So if I'm taking the trade, know that there's somebody on the other end of the trade that thinks I'm an idiot, and vice versa. So my goal is to find the idiots out there and trying to sell them some lottery tickets that will lose in my favor. Okay. So if I wanted to create income out of the price action, I would study stocks and establish baselines where I'd like to own them. One of which is, say, Palantir, good company, misunderstood, stuck in the web of Reddit. So I have not lost money yet selling puts or put spreads into crashes, quote, crashes. This correction, if you caught the knife by selling puts down here, I'm selling puts into the 18 level. I would gladly own it at 18. Last 2 weeks has been in pain. So on a bad day, I would sell a put to create income. I use this example on every presentation because it is flagrant. I've had one with Apple years ago, but now it's like past. So I will use AMD. So this is a weekly chart for AMD. This is the crash from the pandemic. So it had 2 stents. First, we crashed up in January, remember? And then in February, we had the actual lockdowns. And it fell into here. On this dip, the stock was still above 40. I sold puts for October at 22. 22. I collected $2.20. So if I did 10, that's $2,200. And then the stock calmed down and it bounced a little bit and it made me money. How did it make me money? On paper, that $2.20 turns into whatever, $1.50, $1.50. So I could have bought it back for $1.50 and made $700 out of thin air, but I didn't, because I was like, I'll take it at 22. My break even in that scenario would have been under $20 per share on AMD. Look right and see where it is right now, right? So then after it bounced, then it crashed more because we locked down the whole world. So I repeated the process and sold another batch at 20, lower. And for July, shorter in time, I still collected 2.2 because it fell lower at faster speeds. These are weeks, 3 weeks of crashing. So I collected another 2.2. So in total, I collected 2 batches of 2.2s. It's assuming I did 10, that's more than $4,000 went into my account. No money out of pocket. All I had to do is promise to buy AMD at 22 and at 20. My break-even point was just under 20 and just under 18. What I don't wish for AMD to crash, but those are the heaven scenarios where they're few and far between when you get this quality of a stock crash like that. But when you see it, you pounce, and it illustrates how best to use it. I did this for Apple at $60 pre-split. You remember when somebody said it's going to 1111? That's way back, and people made fun of him on CNBC. And then it crashed. It fell 40%, and then it recovered. I sold puts at Apple 60 when at the time it still had no debt before Tim Cook, and it had $40 out of its stock price in cash. So it's like somebody said, you want to buy the best house in the neighborhood? It just fell 30% and now is discounted, and it includes a safe with 40% of the price of the house. I would buy the house sight unseen. Okay. So, and I did the same thing with Boeing more recently when it went down to 90 and Trump came out and said, we will help Boeing. I said in the chat room, yes, we were live in the chat room. I said, this is the time to get long Boeing, sell puts, buy calls. It was under $90. If somebody did that, they paid off their house. And then we did that several times on every dip in Boeing into 107, 120, 117, and they would go stents. And now it's tradable again for Boeing. So you find a place where you find support, and every time they come into support, I sell risk into it. And if the support breaks, I close it. I get out with a little loss. Like right now, this is support. I would consider selling puts if this week Boeing falls again. Where I would check if it crosses 205, I will sell them down here. It has support at 193, 194. If I wanted to own shares, I wouldn't mind owning it into 160. That's just not trade recommendations, concept. Somebody says, how do you time it? You study, you do homework. You see this? That's at least 7 hours of homework for me this weekend, at least. Because these are tickers I don't trade, but they're asking about them. So now I'm seeing everybody's tickers. And if you go through all of these, all of them have alerts. All these dashed orange lines, they're alerts for me. So ATVI came up. A couple of people wanted it, but there are risks with ATVI. So you have to know the risks and rewards. That's it. And you do homework. And look, I have an alert for myself. I don't want to touch it until it gets to here. If it doesn't get to here, so be it.
Hey, Nick, for everybody here that's asking about the chat room, maybe you can go ahead and show them the actual, chat room itself and, what you're doing there, everybody else, so they can get a feel of the community really that we have there for option traders.
So the community is super fun. And as it's growing, we have a mix of fast traders, slow traders, newcomers, equity only buyers like stocks, no options. And it works for everybody for as long as I'm willing to put the effort into it. And here's the thing why. The fast traders are getting do this now and getting big trades in the S&P and in Tesla intraday for fast traders. For the slower traders, the rest of the conversation goes on. But most importantly, first thing in the morning, I don't know why it's doing that, but first thing in the morning, I share, like somebody wanted to see how to set up their platform. I said, I don't know about yours, but this is where I find mine. I said, you click here, you get to here, you click, these are the columns I have. Somebody wanted to see how do I set up TradingView, and I shared my TradingView setup with them. I answered an audio format to somebody. They were totally surprised on their question. So
yes, I just want to give a quick shout out so you guys know that audio feature is something that I've been working with the developers to add, because we are making major improvements to the chat room. So the audio feature is a new feature, and we're adding more and more tools there as we speak, guys.
So this is a fast trade intraday that played out pretty well last week. And when I say pretty well, people who can trade fast, they can make a lot of money quickly. But it's fast trades, SPX. You jump in on a call or a call spread and you get out really, really quickly. So this was 5-minute chart. So it's pretty quick. We had a debacle start, and then I said, this is what we're looking for. A breakout from this zone would say, let's go. And we broke out and we tested footing and we delivered quickly. And then I said, we should get 12 to 19 points or something. And it did this overnight. Now, so anyway, so those are the fast trades that are there. But I also share in the morning before the day starts, the strategy for that day. So I'm trying to get to one, but I probably passed it.
Yeah, the Apple trade was insane, Nick, when you charted that one out.
Yeah, the Apple was fun also, and people that were ready hopped all over it. And here was a discussion of Teladoc, how on Friday something weird happened. So 5 or 6 downgrades in Teladoc, all lowest price target. Nobody downgrades it. They're all maintain. One dropped at $1. This one. What are you thinking? What is happening? It's like they're on purposefully bringing the stock down in order to buy it lower or something. It's weird. I've never seen this before.
It's a waste of money for them to do
a dollar.
That for $1.
From 207 to 206. I mean, what are you accomplishing here other than just putting your Credit Suisse in the headlines? Are you? It's weird. It's totally weird. So let me see here. I'm trying to get to a point where it was the beginning of the day. Oh, shoot. It's doing this. So this was somebody that's trading QuantumScape fast. I shorted QuantumScape and I'm ready to close it. So I said, okay, so you're actively trading QuantumScape. Here are your lines. That's resistance. Chase it if it breaks out. That's support. Chase it if it breaks down. So now they know. So the information that's in the chat room, I promise you, will suit your needs. So Affirm, be careful. I shared a chart. QuantumScape, that was another chart. Penn, be careful. Support, but man, if they lose it, that's another fast trade. Like to judge today's rate, I was talking about trend versus lines. That was the explanation there. Uptrend SPX and it's alive. That was the intraday. What is this? That was the breakout that we were waiting for, right? And the breakdown, head and shoulders. Guess what? This played out on in the day. So the breakout did not come. The breakdown did come. Head and shoulders that played out. But they knew that if price fell below 47.10, they knew to get out for the fast trade. And then somebody asked about plug. And I'm trying to, well, if this is Friday, then the other one is above it. So I give you the day ahead with all the lines on the S&P and the QQQ, the IWM, which is the small caps. And I also do futures. So whatever you got, we got it. And then like right now, I just shared next week's strategy in the video. I'll give you a clue. We have 1 day short, Thursday. The US is closed, but that's not a short week. It's just we're not trading. The rest of the world is. So we're at a disadvantage. And we have the Fed minutes, which are not news. They already told us what they're going to do, but that comes on Wednesday. And Wednesday, we have like 1,000 reports of things about the economy, PCE, GDP, whatever. So everything you want can happen. Now, I also shared what I'm looking for. I'm looking to buy dips. And at what level? I shared the levels. Depends on the speed. Let me see here. I think it's way above that. Anyway, so that's the chat room. And so I shared the video. And I also shared the table. That's Boeing. I also shared the table of tickers. So if we go down to the end, okay, this video is for 2 hours long, and it's 125 tickers, 126. This video is 8 minutes long. That's the strategy for this week. By the way, I did a video and shared it in the chat room about this breakout before it happened. I drew these lines on the XLK. I said, watch the XLK. It has an expanding range and add a breakout line. If they break out from it, this is the upside target. Look at that. Okay. These lines were there. It's in the video. You could go back and watch it. So now what do? I buy the dip. You see that right here, BTD, if I'm not long already. So I said, what if this week, this one dips a little bit and by chance, the money, quote, rotates into the small caps, IWM, RK. We'll see. What method do I use to set up support and resistance? Pam. So let's switch. Pam is asking me to switch the conversation to technical. All right. So quiz time. Get ready. Pull up your pencils. What do you think is my number one tool? If you've seen me, if you've heard me say it, don't cheat. Leave it to the people that are new. What is my number one tool? No. What do I use to yeah, grab eyes? Ah, Devin, you're cheating. My eyes. My eyes. So why? Finding levels is the most important thing on the chart. Forget tools, Fibonacci, anything. Levels rules everything. Okay. Levels rules everything. That's my take. Secondary to levels, then you get your other tools to help you come up to, okay, what can happen next? Let's use this for an example. ATVI collapse, right? So it already lost a lot of its value, 40% of its value in a matter of 42 bars, so 294 days. These are weeklies, by the way. Every candle represents one full week. So last week was painful. 2 weeks ago was super painful. One respite week in between. So this is what is called a falling knife. And you can see here a head and shoulder type of a pattern. So it's not the bottom of it. The bottom should be down here, but they don't always go to the bottom. Okay, so what now? I look left. I said my eyes. So I haven't talked anything. Head and shoulders, I did mention it. I didn't need to. So look left. The first thing I would say is that this area is consolidation. Why? Because they spent a lot of time in it and then they broke out from it. And now they're coming back into it. So there's this line. That's important. And look right. Look how close this line is. This one right there. Look right. You can see my dashed white line is exactly the week, 2 weeks ago low, exactly to the penny. And if you look left, that was the resistance and then breakout. And then they tested it for support and they tried to hold it here and they couldn't. So they clearly care about that line. So this line is important. This line is definitely important. That was the base for the rally. And somewhere in the middle of it is important. Look, the middle of it is this, and you look left, that. So this zone, super important. So if I have not gotten out of ATVI, I'm too late panicking out. However, I need to realize that technically it could still go down lower. So now if I'm looking to trade ATVI, I'd be looking from the long side. Do I go all in? No, because I told you technically it could have lower to go. But you're saying, Nick, it's down to the bare minimum. Okay, fine. What if the market's correct? This won't hold. It will go and finish the job to 50. I have my alert here. It should be a little bit lower. It can be a little bit higher. But for me, I have it here. I will put another alert here. That'll be like much better. So if I were batch 1 of 2, batch 2 of 2 will be somewhere here maybe.
Hey, Nick, really quick. Just want to give a shout out here to Delilah, Janie, and Tim for joining the Options Inner Circle chat room family here today.
Pew, 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 pew. The cheese factor escalates. Okay. I appreciate you joining. I promise you, first of all, because Benzinga is so awesome at offering a way out, that I mean, what are you, if you're serious about your investment and you can't take a risk-free risk, really, because you can back out of it. I've been working with Benzinga since 2011. So we're clearly doing some things right. And I promise you my 120% effort into making everything work for everybody, or at least almost everybody. So I drink a lot of Bang and a lot of C4 energy drinks. I don't drink Red Bull because I don't like the taste, but Mountain Dew would work, Diet Mountain Dew. And I keep up with the demand. So join me. I promise you a great learning experience. Don't join for the trade alerts. Don't join for the trade alerts. I promise you the value is in the learning. I'm going to not teach you how to fish. I'm going to teach you what fishing pole works for your style and see how we can work it for you in order to fish. Not everybody can fish the same way. Okay. That is what I do. How do I find entry points? I use my eyes to tell me, no, don't do this now. For example, whoever bought it here, well, that's not a good example. Here, if I bought it here, I didn't exercise proper caution because that was a prior failing point. Okay, I may have made money from here to here, but if my mother bought it here for an investment, she immediately got into a losing situation of 15%. Not the end of the world because it recovered and jumped back up, right? But let's say you have an investment strategy that has a stop out, you've been stopped out. You know what? That's a question for Rodrigo. So reach out to him. I'm pretty sure his email is in there somewhere, or his phone number too. So look at how pivotal this level was. So if going into it, I don't chase a stock up here. I wait for them to take it out and preferably to touch it for footing. In this case, it held, and then they didn't even slow down here for this week. Let me go on a daily basis and see where that level is. This one. So now, the next time around, it going into this fail, I don't start longs if I'm not long. So if I wait and it comes up to here and I'm waiting and it comes up to here, it's like, oh man, I need to buy it. If I buy it here, I made a mistake. If I bought it here, I made a mistake. If I bought it here, I made a mistake. Okay. When it comes into a prior failing point, I should stop myself. I'm too late. I should have been long earlier. So if it comes into here, I don't buy it until they start closing the gap. And even then I expect sellers, but at least wait for the gap to trigger by this. It's not going to be easy. And there are sellers lurking at 75. And that's where my expertise comes. So we will discuss what levels are good entry points. So how about this? How about, let's say, instead of asking me, how do you know when is a good entry point? Why not pop in and say, hey, I'm looking to get long ATVI or XYZ stock. What do you think? Is this a good place to get long? I will offer you my full opinion. And if I like it enough, I'll offer it in a video format. So, I mean, put a price on that.
Somebody's asking in the YouTube chat, what time are the webinars? So the weekly sessions that Nic does on Sundays are just for the chat members. Nic, maybe you can elaborate.
Yeah, on Sunday mornings, we get together. I issue the link. It's always different. On Saturday during the day, I send out a link to the members that are in the chat room. And the link, we'll get together on Sunday, 10 a.m. Eastern, so 7 Pacific. And it should last an hour, but the demand has been so high. The webinars themselves are pretty busy, but not noisy. I'm the only one talking, although everybody has the right to talk, but they don't. And I power through all the tickers because they shared them with me ahead of time. I send a list out. Here, post your requests. They give me the tickers. These are the tickers they asked for. I'm not a talking head. That's what they asked for. So if you like, there are a lot of micro caps in here that I would never trade. Like this one, I think is like $1 call stock, if I remember correctly. So they're in here, and then they have a reference link that stays there until I kill the file. I mean, they can reference it any point in time. And I'm thinking, this is evolving into more and more tools into it. So eventually I would link it to some sort of a dynamic link somewhere. If I can strike a deal with TradingView or something, I'm not sure, but we'll see.
Hey, Nic, someone's in the chat room is asking if they're completely new, where would they start with your chat room?
Okay, so if you're completely new, you should make sure the package you're taking includes the instruction videos that I have posted on Benzinga website. So your welcome landing page should say, I think, start here or something like that. Rodrigo, you
yeah. So there's a getting started page in which has like, I think 8 or 10 videos that Nic made just for chat members, which covers everything from the basics to the intermediate to the terminology, the concepts,
and we're adding to them. And if you say, hey, I need the other day, Teledoc, we took a trade and it spiked to high heaven. So I did I did something to it. It's called a call diagonal, and I shared a video. I was like, here's what a call calendar looks like. Here's how it's different from a call diagonal, from a call spread. So it was an education on the fly. So if you don't see it, you ask me about it and I'll post a video about it.
Yeah, that's what I've noticed. So basically Nic is posting the trades, and within the trades, you get the education because he always gives you a full explanation on the logistics of the deal, the reasoning, the expectations, the risk management. It's not just, buy here, sell here. It goes like, it does have a lot more work put into it than just, buy here, sell here, right, Nic? So
Yeah. And also, however you're trading now can get better if you have better chartists on your team. And I am your team. And you see, you will see what I mean in a second. I will open up the floor for tickers and they're going to start flying. That means you're hungry for ticker discussion and you will have no need to panic because you will have access to it any day, all day. All right. So as I say this, let's open it up. Give me a ticker.
Yeah, this is just for you guys to be clear.
Pfizer.
This is
Okay.
a sneak peek of what Nick does pretty much every day on the chat room.
All right, Pfizer. Good, good, good. I appreciate that. Jermaine, I remember you earlier. You said something smart. I can't remember what it was. So this is not an obvious point of entry for Pfizer. Okay. Same comment goes to AMD. If you're not long Pfizer already, you missed the boat, the easy boat. It can rally from here, but the odds of a disappointment are much higher than the odds of a lot of upside from here. So what will I do? I look for levels where I would like to get long. So for me, dips into 49 are viable for fast hands. Preferably, I have my alert set right here, somewhere below 47. Me personally, that doesn't mean it's going to go there. But here are my comments. Resistance zone, not ideal to chase up here. Buy the dip opportunity. Support, this is old. So it's so old that I didn't even update it. So if I were to do anything, I will say buy the dip opportunity here and one lower. So it's a zone. In fact, I will put another alert for myself here for sure. Look how brave Nick is. Sarcastic. I'm chicken when it comes to investing. I want something that's guaranteed almost to be in my favor. Okay, so let me scroll down the list for a second and be fair. I saw AMD, I saw PTLO, I saw Plug. The Qs, they're at all-time highs. What do you expect me to say? Short them? Not for me. Upstart. So Upstart, I'm glad you mentioned that. So Upstart, very fast-moving stock. This was the trade alert I did with a video. I said we're stuck in a range, which is unusual for a fast-moving stock. I bet it's going to break out. And look what happened. So if somebody bought calls, whoo, they paid off their house. I sold put spreads. And then I got cute and I sold the call spread, which gave me pain and made my trade much more drastic because I didn't think it would do this, but it did. So I closed my short last week. So now I went back to greenish trade. So now I'd be more likely to look for places to buy the dip. Last week, somebody asked me, is it time to buy the dip? I said, I can't tell you why, but the options prices tell me that the body language is lower. And this is what happened. Whoop, another couple of bad days. So this is a much better zone to be catching the knife. Realize that there is a gap down here. Like when we called it up, this was insanity. And then they built insanity on top of insanity on top of insanity. And now they took out 3 insanity levels. Now they're back to 1 insanity level. So half position in Upstart's bullish here, or sell a put spread down here. That's what I would do with Upstart. Tesla is an active trade. Pfizer. Let me see here. I wanted to do another one that was pertaining to something. Rivian. So do your homework. If you drive where I drive, anywhere around Newport Beach, you will see a lot. You will come across with Rivian cars or trucks. They're sharp. They demand attention. So you say, "Whoa, what is that thing?" When you see it, is this a 60-minute? Okay, so this is a 15-minute chart for the active trader. Because really, if you're not an active trader, you don't need my opinion on it. You should decide at what level you'd like to own it and hope for the best. Me, I'm scared about committing to it. I love the car, but I don't know the metrics. The one good thing, Amazon, I think, owns 20%, right? Maybe, maybe not. Anyway, check who's investing in it and then check to see if they have a pipeline of guaranteed sales. I have no doubt that the car is attractive. It has its fans. I know somebody that works there, low level and not like, inside trading or anything. So the price action is this should hold. If it doesn't, it's going to fall to here, and then it's a buying opportunity. This was the all-time low for a couple of weeks. So it does have options. So if you wanted to buy Rivian at a cheaper price, so you go into the, let's say you wanted to go buy shares. So how about this? How about you collect $500 to buy 100 shares at 100? What did he just say? Okay, how about different? How about you collect $500 for the opportunity to buy it $10 cheaper than today? So who can do this? Only somebody that actually can afford to buy the shares. Otherwise, I told you, you create drama. So somebody will pay me money to buy their shares down here. Or what did I say? 119? $10 lower. So 119 right there. So in this kind of stock, the fact that they're paying that much tells me that this next week could be a little difficult in Rivian. So what I would do is on the dip into 120, 121, I would look to sell $100 puts that expire this week. If and only if I want to own the shares. If not, I shouldn't do it. And if I don't want to deal with it next week, then what I should do is find that same opportunity and go to December and sell it at $80 or $85, or go to January and sell it at, somebody will pay you $340 to buy their shares at 80 if you're willing to sell that put and hold it. So that's Rivian. Upstart. Tesla is a different beast. Never short Tesla. And you can trade it actively. These arrows was an incredible couple of days in short-term trading in the chat room for Tesla. I mean, I called it so freaking perfectly. It must have been sheer luck. No, I'm just kidding. The charts were so clear. And I cannot believe at 3 minutes before this breakout, I kid you not, I posted it, so I'm not lying. You can go back in the chat. 3 minutes before this broke out, I said, Tesla looks good for a spike. Get long Tesla. And then boom, this massive rally, and then it dipped. We did it again. Boom. And then this also got long here. And then it took a little bit, but this happened afterwards. So it was an epic couple of weeks for Tesla. And now I don't have anything on Tesla. That is after also a trade on the earnings for Tesla. Also was a guesswork. But here, if it gets to up those levels up there, then it becomes to where, okay, are you in it for a trade or an investment? So there might be some headlines coming. This action is not normal. These two candles are death. What does that mean? If it gets to them and you're not long and you're buying longs here, you're anticipating something. I would wait until they break through them convincingly to chase them. And then the rally, not as an investment, as a trade. As an investment, just buy dips. How big of a dip? How long of an investment do you want? Okay, so plug. I'm not picking and choosing. I'm just going through whatever I think I can do. Help. Okay, so plug. I went long plug a couple of times and shared it, and it played out. And then I said, I'm stopping out because I had too many longs. But the trade is a long-term, look, I expect sellers, but I said I'm long in spite of the sellers, but I had too many longs, so I got out. They shook me out. I didn't lose money. I just got out. Now, this is a daily chart. A breakout from last week's highs would bring buyers to 56 or 60. However, please note that I think, like I said here in the middle, there are sellers lurking. Be careful with that, meaning it could not, maybe it doesn't develop. It sucks you in one day and it doesn't develop. Be careful. Conversely, there are buyers down here, and the breakout should be 52 target. So this is a 52 target in the making. I could stay long, but don't load up long thinking it's going to go to 60. So hopefully you know that. There's going to be a lot of sellers here going into resistance. PTLO, I don't remember it off the top. Baba. Ugh. Let's go to Baba. So Baba needs a hold or else. So this was my last note on it. Last chance, else 110. You lose this one, I think it's going to 110, maybe even 98. I can't fathom it. It's dirt cheap already, priced like a bank, a PE, whatever, 15, 20 for a company that quintuples its sales in 3 years or whatever it was. It's just incredible, mind-boggling what's going on. However, I did plot it. I said this could happen. This is from before, and we're almost there. So fundamentally, I wouldn't, if I didn't capitulate out of Baba yet, I would capitulate if it loses this. If I got long Baba here, I don't blame you. I would stop out if it loses this. It has support, but I think they would be malicious about it and they want it down here. Just support, I mean, exit with a small loss and re-engage long lower as a trade. As an investment, if you nibbled for the long term, I don't blame you, but keep in mind the whole market is at all-time highs. So hi, Jermaine, you're in. I love it. I think you and I are going to have a good time in there. I saw your answer earlier. That was pretty good. So it is a good company, but it cannot trade in a vacuum. It trades with the market. So we'll see what happens. Let me see here. CRO. CRO is a conversation for the room. I don't mind it. That's the coin for one particular platform, which I use, by the way, crypto.com. Whatever we do, PTLO, right? PTLO. Okay, so if you do CRO, you should look into staking. If you don't, because you're crypto boy, so I don't have to tell you that. That's your handle. That means you know what you're talking about there. Okay, so let me see here. What are we looking for? Portillo. I don't know the stock. On the daily chart, you don't get much except this candle. So trade the edges of this candle. You've got support on this end. You've got resistance anywhere up here. The last Thursday candle, they opened here, they closed here, they reversed it the day after, and it's completely engulfed. Not very good price action, but it could be basing. I don't know, but that's not very clear. Jumia, be careful, please. Be careful. It is not the Amazon of Africa. It is just another platform in Africa. In fact, I think the company is German. So Snap, I like it long-term, better than Twitter. They're in the same boat as Twitter. Snap has an opportunity to be a metaverse company-ish. I just don't see Twitter doing that. Now, Snap, I'm long and I'm suffering, just suffered. I was green until this tick. It's at a must-hold level. If that level fails, it could fall to 42 or 40. However, it does have a lot of supports, like one immediately thereafter, like at 50, one immediately thereafter that for about 48.20. So I want to see what happens this week, but know that it's at a disadvantage because it fell into a must-hold situation when the market broke into all-time highs. So not ideal. Be careful with Snap. ATVI, Sean, you just missed it. We did a whole bunch about ATVI. There's no way I'm going to go to it. Let me see. Hive, I don't know what that is. Is there a particular technical analysis book I recommend reading? Sean, I learned all of this stuff on my own. I had my own tools. I tried MACD, I tried this, RSI, and tried that. It was so confusing. A lot of fake outs until I met 3 old-time traders that were futures only traders, which means they cared less than zero about what ticker they're trading, more so about the price action. And it was an unbelievable aha moment for me. If you tell me I can never trade based on thesis, like fundamentals or charts, which one would I keep? I would keep the charts and I'll say, you can take the fundamentals. I am a fundamental trader, but if you force me to only use one of the two, I will use the chart because machines do the trading and they don't care about fundamentals. What they care about is technicals, data on the chart. They look left and they decide what's the trend and they act code on the trend. Sell the pop or buy the dip. That's as easy as that. So I don't have any books that teach that stuff. I can teach you that stuff on a daily basis. Amazon, it's a complicated answer, Melissa. If you joined, I can explain it to you. It's basically like the small caps. Amazon could be 4,200 by February, but it needs a couple of things to happen. The breakout started a couple months ago and then fizzled, but it's still ongoing and it's on a weekly basis. So the fact that it's rallying, whipsawing into a very large range makes it impossible. I'm going to show you the visual of it on a weekly basis. So if you remember NVIDIA, how it broke out, it did, actually, I'm going to leave this up here. First of all, NVIDIA did something where it rallied and consolidated, and then it busted out on a weekly basis. So Amazon rallied, and then it consolidated for months These are weekly candles. And then once it broke out, it rallies as much as it rallied before. So they go an A move, a B move. This one could be down too. Doesn't matter. Just consolidation. And then they break out from the lid from before, and then they take off to the moon, right? So let me take that out. Where is it? Take some of the noise out. Consider it now. They rallied. They spent this whole time consolidating. And this was the first fake out breakout, but not really fake out, because it broke out and then the markets corrected and then it fell into support. They didn't go to the bottom of the support. They could have gone to here. They didn't. They held here. And now they're coming back, repeating this candle. So what if, look at this fake out breakout, 2-3 weeks, and then they came back corrected, and then they came back and they did this and did that. What if this is actually the breakout confirmation from this period of time here? It goes up as much as this. So that puts it above 4,000. What does that mean? Don't go pile into Amazon, because there's a whole ton of things that happen in between them. So now, first of all, Friday's candle, look at where it failed. Almost to the penny to where it failed before. So now you've got your first action line. I'm going to put it, in fact, I'm going to put it right here. So I don't get faked out by that one. I'm looking for this one. So that's the intraday breakout. But visually, that's not a good place to start an investment, correct? So that makes it an active trade. And not on the cross of the line do I jump in, because they have to cross, come back and test it for footing. That's the proper thing. So if I miss out, did you hear the number I said? 4,000, 4,200. So who gives a crap if you miss on 50 points, right? So get the confirmation before you get stuck up at the all-time high. Miss out on $10, $15, $20. It's not a big deal. You're going to have hundreds if you catch it right. So as a trade, you're either trading 5 minutes or swing trade opportunity, for which I would wait for the breakout confirmation, meaning breakout, fade, come back and take it out again. So the ideal breakout would happen like this, and then take it out. So that would be the ideal situation. Like, come to it next week, fail, come back to it Friday or Monday, and boom, off to the moon. That would start things. Okay. LCID is not an obvious entry point. FSR is not an obvious entry point. Going from, okay, let's go to FSR, because I don't want to discuss LCID. I just hate how much people love it. It's a beautiful car, beautiful car. I just hate about the upside. They call it, it's disrespectful when they say Tesla killer. If you know anything about like fighting or boxing, it's like having an undefeated, like Mayweather, picking up a fight with somebody that's not ranked at all. Like all these yahoos from YouTube fighting champs. Why are the champs taking these fights? Money, of course. But from a respect perspective, you should fight the number 10 ranked, number 9 ranked, number 8 ranked, maybe jump one, but you don't go to the champ. Well, Tesla creates $6 billion in cash from its own operations. In its dream, Lucid can come even close to that in total sales right now. In its dream, can it match half what Neos produces in units? In sales, it could get there because their cars are $1 billion. So expect the realistic things. So if, I don't know what Lucid is priced in, but you can do the math. I said that in the chat room today. So there's the information. I think the maximum cars they can produce is like 34,000. How much of that total are they going to produce in the first year? And when? Okay. And then you can do that, multiply it by the maximum price. That way you have the best case scenario on sales. And if the sales projections that are roaming around now with the analysts are higher than that, there's going to be disappointment. So you can do your math and throw it against the expectations to see disappointment. I have no doubt the car is beautiful, technically genius. Got 16,000 screen. The door closes by itself. You push a button. Like, I didn't think closing the door was that much of a hassle, but apparently it is. And you need a button to automate. Imagine the things that can go wrong with that thing. Anyway, I'm a race car driver, and it's not a car I would buy, but it's absolutely beautiful. But you have to know the expectations. FSR, on the other hand, the Ocean line of cars is somewhat cheap compared to Lucid. Lucid is the top 2%, maybe 1% of the country can afford it. This one is more populous. So I would imagine that this one it's not a niche market from that perspective. This is your next trigger. If they go above this, they can get to 30 technically, if not more, with a lot of resistance here where I put it, and higher, a lot of resistance. If you buy it for the first time, when it hits 29, you're making a mistake, or 28, you're making a mistake, even 25. So you either buy it here for the rip back and breakout, which is not what I would do. Buy the dip, which is what I would do, where 18 at least or lower. I have my alert down here to swing it back up as a trade, or as a trade to break out from here. If it's an investment, do your homework, buy it for the long term. That's all there is to it. MU, I don't like it up here. It's too high. It went too far. I would wait for a dip. I don't remember CHPT. I charted it this week. I just don't remember what I said. Okay, so let's check CHPT up close. Clearly, it's a descending chart. The zone is wide and it's going in the way of the bears, lower highs, lower lows. So let's see if we can get a little smarter up close. So we have a resistance zones above. And so this bounce is going to find some sellers, but there's a breakout right above that. But everything is a resistance above here from that little jaunt right there. So if I'm the one that bought the breakout from here or the breakout from here, I'm not, I should have trimmed here because of that. If not, maybe I can still trim on pops and then leave some runners for the second leg if it happens. If I'm looking to get long, I would get long down here or chase this breakout for a trade. That's for a charge point. I'm going through selling puts on BABA. You can, Kim. You can sell puts on BABA if you're willing to own shares. POW? I don't know POW. Palantir and PayPal already did. I love both. I would buy Palantir dips. I would buy PayPal dips. I already bought PayPal and I'm red in it right now, but I could salvage the trade. They are both technically challenged short-term, long-term. They're viable opportunities. Palantir and PayPal. I think I did both, so I'm not going to address them right now. Maybe I didn't do PayPal. I'll show you PayPal. All right, so technically PayPal, the loss of this line reopens the more downside. However, if I look left far enough, I see this whole zone that is in contention. So it is supportive. They should stop at 192. They should stop at 185. They should stop at 175. I could have said all those things about 225 and 212. So if I'm long and in pain, I don't add because I don't know anything new. I don't know why they're doing this. The reaction to the earnings was not warranted. They grew. They didn't shrink. Expectations were wonky. But I think the turd that made this happen is the rumor of Pinterest purchase. So I don't think the company came out and said, PayPal, no, we're not looking to buy anybody. The rumor, I think the company said, there's no deal. They didn't say we didn't talk. So maybe people are scared about that, but what would explain Visa? Same scenario. Both are viable opportunities. Somebody said that they were going to be redefined as banks, so they would be part of the XLF. I thought they were already part of the XLF. I'm not sure, but maybe. Oh, quiz. Do you know what is the number one? The biggest component of the XLF. XLF is the ETF for banks. If somebody can guess that, that means they're on their stuff. Nope. I'll show you in a second. You're going to lose your minds. You go, what? That's total BS. Yes, Kim. Smart. Berkshire Hathaway. Not even a bank. 12.8% of the XLF. So I thought that Visa and MasterCard are here. American Express is here. So anyway, something's going on with PayPal and Visa, MasterCard, and Square. Those are the ones I would catch. SoFi next. Affirm, I wouldn't now. I was long SoFi and Affirm where nobody liked them. Affirm, we went long way before the pop. Right there. I said breakout opportunity. I drew this, and look what happened. Somebody says, what about now? The dip was like, okay, but the dip came after a lunatic rally. No, it is viable for a trade, but if it loses this one right here, it comes back to here. And that's where I do have an alert here to start looking. I do have an alert here to maybe do something, but this is where I would actually get long Affirm again. I love it, but not up here. So somebody mentioned something else. Am I using Thinkorswim? I do use Thinkorswim, TJ. It's in the background. You see it? I have a lot of windows. Neo, I do like it. It's a viable dip, but people hate it at points. So not all in. I expect this is an opportunity, but I drew the opportunity from up here. I said, I'm okay if it dips to recover this. This company is growing leaps and bounds, and it doesn't have the threat of the Chinese government because it is part of it. I think they do business, so they're not going to go out there. Also, it's falling into the breakout zone, little tiny breakout zone right there. So this whole area is supportive. Now, technically, if they lose this, there's a debacle coming. So I don't load up so I can buy it under 30. Maybe it doesn't go there, but I'll sell a put down there. Good company. So if I were to invest in an EV company, I would like to see a P&L. And the only ones with an actual P&L are Tesla, NIO, XPEV, and I believe LI. And of course, I think the biggest winner in EV is going to be, anybody guess? Can anybody guess? No. Oh, Apple, come on. No. VW. It's the biggest car. Yes. Kim, man. Kim. Bam. Steps up to the plate. Home runs all the play. VW. VWaggy. I live in EV country. Southern California is where all Teslas live. I kid you not, my neighborhood, we have 70 homes in my neighborhood, and more than half are Teslas. Not mine, but more than half are Teslas. Now we have like 3 or 4 Audis out of 70. That's pretty big. And a lot on the road, and a lot of Kias too. So the legacy car makers are going to be delivering the bulk. So here's the problem with EVs. Currently, the world produces about 90 million vehicles a year, new vehicles every year. Imagine if they were all EVs. We don't have the battery technology to sustain all of them, and we would have landfills of batteries like you wouldn't believe. So we'd be swapping one evil for another. The first evil we can't see, the battery landfills we can see. So I think Toyota is going to take everything by creating a new market for a hybrid, another hybrid. They invented the EV market by opening the door with their hybrid. Up until the Prius, nobody wanted to buy a funky looking car. And then they made it okay to drive the hybrid. And then suddenly everybody had a hybrid. And then from that door, Tesla came in and said, here's an electric car. Do you know that the electric car existed in 1880 something? 1880, but they never took flight, because most likely of now, the biggest problem is the battery. QS will not supply those batteries. QS will fail. I shorted QS on this pop. I am an electrical engineer, and I'm not an expert in batteries. And what I know from engineering, it is impossible to do what QS is trying to do on an EV basis. You can do it in the lab. You can do it in a small appliance. You cannot put the load of an EV in any climate on a solid state battery. So the easy answer on that one is right now the batteries explode because there's liquid in between the two anode and cathode. And if You build up like stalactites, goes from one side to the other, pierces the barrier, boom, explosion, which happened to a neighbor of my in-laws in Texas not too long ago in a Tesla while they were on vacation charging. So the solid state battery, which is what QS is trying to do, QuantumScape, is it has a solid separator of the two, which is smaller, lighter, and less volatile. That's great, but it's not going to work. So somebody who's shorting this company, I shorted it and I should have closed it last week. Maybe I'll get the chance to close it this week. I sold call spreads and I bought a put. So I have a finite amount of money I could lose. I did not short the stock the traditional way. Do you know how you short a stock traditionally? I don't know enough, Vincent, about that subject. Yeah, you sell it, Jermaine. But the point is, you sell something you don't have. That's why it makes it risky. So let's say you have 100 shares of QS and I wanted to short it. I'll say, you know what? Yes, Jermaine, I borrowed Jermaine's stock and I sell them and I put the money in the bank at 40. And let's say I was right and it fell to 34. I can go, quote, cover my short by buying the shares at 34 and delivering the 100 shares back to Jermaine. So I borrowed 100 shares. I returned 100 shares. The difference in the price is my profit. But what happens when it takes off? Unlimited risk until I cover my shares. So you go out and cover your shares. Well, sometimes the shares are hard to borrow. So there aren't any around. So that's what's called a short squeeze, where if it's going at 42, I'll throw a bid for 45 so I can be guaranteed covering my short, where the guy behind me sells it for, buys it 50, the other point, I'll pay 55, 60, 65, and short squeeze. GoPro, I'm long. It's been my biggest winner this year out of like beautiful luck. I love it. One little thesis that, so I went long and it exploded and I booked a lot and I just re-engaged long. But buying cheap leap calls is how I'm going long. The company is not that exciting, but yesterday I had somebody, my son had stuff he was selling on Craigslist, and he had like a floater thing where you attach it to the camera. So if you're doing it in the ocean, so the camera doesn't sink, it just floats. And the person that bought it, oh my God, thank you, thank you, thank you. I mean, I found a GoPro. It took them weeks to find a GoPro. Apparently they're sold out everywhere. So who knew? So that reminds me, I got to tell my son, he has a couple that he has not using. He should probably sell them. So the company makes good cameras, but it's nothing exciting. I remember shorting it at 90 when they called it the YouTube killer. I was like, come on, YouTube killer, short it. It was at 90, GoPro, 1 month. Oops. I was on record at the time. Let me see, did I put a... Anyway, it popped to 90 up here. I shorted it. There used to be comments up here. They're gone now. So GoPro, this is a monthly chart to eliminate the noise. If it goes above 14, I think they have enough oomph to get to 25 with a lot of resistance at 17 and a lot of resistance at 20. Now, don't go out and load up GoPro because Nick said it's going to 25. No, that's not what Nick said. The first word in that whole statement was if they go above 14. It is currently 11. That's a mile away and a half. It's making higher lows. You can see it. Progress. The bulls are making progress. They have a wall above them. Several walls. Let me go back to a weekly chart, zooming in at shorter term. What? I didn't do that. Weekly chart. Now, that's the progress we were talking about. And that's the area of the wall. 14 is up here. Look at that fail. That's a wall at 13. So let's tackle that first before we start celebrating 14. So this is one good progress line. This is definitely another good progress line. So I'm long. I will sit in it and see what happens. If this is taken out, I think a monthly cup and handle pattern could add another $10 to it, which is by the fact that I said a monthly pattern, it's slow developing. So not as soon as it crosses 14, it's a monthly candle. So the month has to close there, or at least be close to it. NVIDIA, let's see, it's up big time. Should I trim? Okay, so Vincent is bragging about winning on NVIDIA. Good job, Vincent. But here's the thing. Anytime I'm wondering about booking profits, I book it. If not all of it, most of it, and leave runners. NVIDIA, let's look at the chart. Yeah. You need permission to book profits up here. You need help. You need to be in the chat room because you need to bounce ideas off of other people. It's not a bad thing. It's just part of personality, which is I like. I like to debate things. The breakout in NVIDIA was about 225, whatever that line is. 228. The breakout was here. Do I have lines? I must have breakout lines. Okay, so let's go to daily. Important zone. They used it as support and took off. So if it ever comes down here, mortgage the kids, the house, the dog, the car, get long. So resistance and opportunity. Yeah, that was it. So buying the dips are great. Buying it here for the long term is not. You just got lucky. Vincent, take the luck, hey? Take the luck.
I've been following your track on NVIDIA, on Tesla, on the main stocks that I usually trade around. And it's good because everybody else it's like constant updates on the stocks that you want to hear about, if that makes sense.
Right. And the fact that you can pop in and ask me about something every day, 3 times a day, is also the benefit. That's what I said. I tried to convey to people here. The viewers here, by the way, I bet you, I said, you're going to have a frenzy of tickers. And I bet you some of you are upset I didn't get to your tickers. Like somebody's waiting for, Pan West. But that is what we do. So Palo Alto is a wild ticker. Twilio is also a wild ticker. I'm going to see if this is an all-time high. So if you're asking me, what about it? That means you're looking for my permission to get long. No way on earth would I ever tell anybody that is an obvious entry point, because it definitely is not an obvious entry point. That doesn't say the company cannot go higher or do better. I'm just saying this is not an obvious entry point. If you're looking for easy trades, that's not one. Okay, so if you're looking to short it, let's say, why do you want to short a fast gazelle? Short the limping ones. But if you do want to short it, the sensible way to do it is to buy a debit put spread 2 months out at least that costs $3.40. You say, what level? If you hunt it down, if it's $10 wide and it costs $3.40, that's the right level. I promise you it'll be the right metrics. Or sell a call spread in it about 3 weeks out, meaning I don't need a drop to win. I just short it above 550, say. And if it doesn't go above 550, I win. If it drops, fine, I win. If it doesn't drop, I win, as long as it doesn't bust through. And in either case, stop out at X%. If you're okay watching $500 loss, stop out at that and no more. And also some people will do both. Like I told you earlier with QuantumScape, I sold a call spread and I bought a put, which means I'm very short, but with finite amount of money. So if it falls, I make a lot of money. If it doesn't fall, I don't lose much, but I don't make any. Had I done only the call spread, the bearish call spread up here, I would make money. So let me show you what that means. So you've heard of iron condors and such. So spreads, I mentioned spreads earlier. Let's do this. I mentioned selling puts, right? So selling puts is a quote bullish thing because I want to buy shares, right? Even though I can't make money on the shares unless the shares fall, but I can make money out of thin air if the shares don't fall. So it's a bullish position. Another bullish position is the variation of it, because somebody said, but you lock up a lot of money. Well, I can change that by doing a call spread. So I sell one, but I buy one below it. So now I collect less. Instead of collecting, let's go to that one. Instead of collecting $5.70, I collect $1.40. And I should go lower. Why? Why should I go lower? Does anybody remember from the first conversation? What was the definition of risk? The one is how much money can I lose? Odds. Yes, for better odds. My odds here look good. Okay. But it's paying me too much. How do you know, Nick? How is it paying you too much? Well, the reward is, I don't know, 30% air math, 37% on the money at risk. Have you ever met an easy 37% trade? No. Chances are there's going to be drama. So meaning the stock is going to fall at some point. This is much better odds. So I'm going to stay up here though, and assume that this only pays $1. So the odds are 85 to 88 to 90% odds in my favor. That price will be at or above 90 in the next through January, middle of January. So that is the bullish side. This is called, you've heard it called bull put spread. I call them credit put spread because they describe a limit credit going into my account. I'm taking risk. It's like me selling a naked put, but I'm getting off the risk here. So I'm on the hook at 90, I'm off the hook at 85. So if it goes to zero, my maximum loss is set at $4 per contract. And if it is indeed that, I get 25% yield on my risk. What? So if you wanted to do that with stocks, you would need to find a stock that rallies, is scheduled to rally 25% in the next 60 days. What is that? 61 days. I don't know of any stock. If you have one on your watch list, I mean, they can rally that much, but they're not scheduled to rally that much. This will deliver that much profit in all scenarios but one. The only scenario that it doesn't deliver that profit is if the stock crashes. Because if the stock rallies, I win. I get my 25%. If the stock doesn't rally, I get my 25%. If the stock falls, I get my 25%. If the stock crashes, maybe I lose money. Versus me buying shares and needing the 25% rally to get my 25%. That's the only way I can make it. So that's why I like these. They're boring. They should be boring. They're designed to be boring. This sticker is not boring. So that is where you can have a 90% hit ratio, win ratio, and 95% win ratio. You may not have any losses, but that would be like a freaking super good luck and a lot of talent. But I've seen people do it. So it is the easy, boring way to get long. Now, you've heard of a bear call spread or a bearish or an iron condor, and I'm going to show you what they look like. So this is a credit put spread. This is a credit call spread. They're opposing each other. Whenever I sell something, you remember I said in the beginning, when the seller is committed, they are obligated to do something. So that's risk. And I sell this, I open risk. I buy this, I limit my risk. When I sell this, I open risk. I'm short the stock at 160. But Nick said don't short. Yes, that's why I'm buying the 165 to limit my risk. So now we could go to the moon. I can only lose $4, actually less, $3. So in this case, assume that this pays less. That's too aggressive. I want it higher. And assume that, so we collected $1 from here, and we're collecting another $1 from here. This is a bullish position in spirit, although it doesn't need a rally to win, like I explained. This is a bearish position in spirit, although it doesn't need a drop to win. All I need is for Rivian not to go through 165 in 60 days. That's all I need. The total risk open is still only $5 wide because this one is $5 wide. Same with this one. It's $5 wide. It's 90 to 85. You can't see it. 90 to 85. So if the stock price goes to zero, my maximum loss is $5. I collected $2. Therefore, I can only lose $3. If it goes to 1,000,000, my maximum loss is $5. I collected $2. It can only go to $3. You see what I mean? So the stock price is not going to split in half and half of it go down and half of it go up. That doesn't happen. Therefore, I can only lose one side or the other. So me collecting double the bounty lowers my out-of-pocket risk, but now I can lose in many different ways, down or up. However, the odds of success are the same up here or down here.
Hey, Nick.
So, yeah.
Someone's asking really quick, if you go through all of this whenever you're putting a trade on the chat room, there's just a couple questions here that have been coming in.
Okay, so when I do share at least 3 to 5 trades a week, and the setups all look the same. They usually have a big video, and the video will go through the macroeconomic conditions. So what does the SPY look like? And then the microeconomic conditions of that particular stock. In this stock, what is it doing? And then what's my thesis? Why am I taking the trade? Because I'm doing this, I'm doing that. I usually explain it. And I explain what would get me out and how. And I explain 4 ways of doing the trade. 5. 1, using the stock itself. 2, using, I'll show you an example. I'll even show you a defense stock. So another way would be to actually buy puts or calls. Call spreads or naked calls. That's quote buying to do the trade. Or if I'm shorting something, a put or a put spread. So buying to do the trade. Or the other 2 ways is me selling something and collecting a premium, like I just mentioned, like selling a put spread here or selling a call spread if I'm shorting. For example, I'll share the last ditch effort on Alibaba. I said, know that we are against the ropes here with Alibaba, and I'll share my last entry point. Why not? Please don't take these trades because you have not seen the video and you don't know what went into them, okay? And all the caveats that go with it, 16 million of them caveats. So this is what the trade setup would look like. These things are debit. So debit calls, somebody that wants to buy a naked call. Debit call spread, same spirit, only with a spread. I usually say faster call setup, not for me. Slower spread setup, sanest bet to my eye. The price at face value at the time I shared it was about 8 and then 380. We had a bad day, so they lost $100 on that one. This one lost barely 30 cents. So you can see how this one does better on a bad day. Conversely, selling a put to own shares, they collected 260. And yes, absolutely, Brad. And now it's worth more. So they're losing a little bit, 40 cents. This one was a credit put spread. It's basically this guy right here. The sold puts, the credit put is this guy alone. The credit put spread is when you add something below it. So make it a spread. You sell one, you buy one below it to limit and you collect less, but it's a moderate long. And it has a low enough delta that it's attractive. And they both have the same trigger line. 115 is a trouble line. So they have an 18% buffer still from current price, which is good. The bigger the buffer, the better. The lower the delta when I'm selling in credits, the better. So that would be in there. What else would be in there? The charts, of course, and discussions of this would be with Alibaba, though. I would say Alibaba, I would go into Alibaba and share those lines themselves. I would go through it and say, what did we pick? 115? I don't know if this was the contract or not. Let's go with it. I would say, okay, so I could get long the stock by selling a put, but only if I can own the shares would I do this. If I don't, these are my words that I would use in the videos. I would change it into a credit put spread and lower my money at risk, the maximum. So actually limit my money at risk maximum. So I take in less, but the odds are the same. And the worst case scenario is not as bad. Now, somebody that does not want to sell puts or put spreads, they would probably want to buy calls or call spreads. Actually, I should not do that. Okay, so if they wanted to buy a call, it would cost $700 now, but at the time when I opened it was $800, right? And I offered the idea of, hey, instead of that, how about a call spread though? And it was $10 wide. So now it's $277. At the time it was a little bit more. So they are long, but less long. So all this will be in the video. And then if the 2 next days or the next week you come back, say, hey, Nick, I took a trade that looks kind of like this in the video you mentioned. What do you think? What are you doing? What do you think about it now? I don't have a rule of days to expiry. When I'm selling stuff, I don't want to play the current week, although they're available, just because if something goes wrong, you can't salvage it. So if price falls to the lower end of your spread and you sold the credit put spread, it prices out the worst case scenario pretty quickly if there's little time on the clock. But if you do it way out in time, then you have time to react. Just same concept. It's an easier management style.
Yeah, and if you guys saw the poll really quick that we did, over 50% of you guys are just doing calls and puts. And as an options trader, I'm going to tell you that it's very important to look at the different types of option strategies that you have, because that's what they're there for. And, Nic does a really good job covering all the different types of option trades that you need, not just calls and puts.
So let's go back to square one. I don't know if you've taken options classes. One of the first things that comes out in those classes, which I've never done, by the way, but I hear about, most options expire worthless. So this is where you stand up and say, so where is the class about selling them? Because clearly the sellers are winning most times. So why on earth would I want to stick to only selling stuff? Sometimes selling is not appropriate, but in most cases, you have the odds in your favor if you do them right. So you've heard of the market maker term. Those are the people that sell the bulk of the stuff. So that if they weren't selling anything, there wouldn't be market. So if somebody's buying a put, buying a call, chances are they're buying it from a quote market maker, if it's near the money. So if my goal is to put trades on that don't require the market maker to lose money, that's like a little known secret out there. If you follow the herd, you want the market maker to lose money, and guess what? They don't lose money. So you're at a disadvantage. And unless you're really good with charting or really lucky or both, you're going to lose money in the long term. So you need somebody who can help you pick out what are the market makers looking for, so we can trade with them, not against them. So if you go to a casino looking to beat the house, you're going to lose. But if you're looking to win while the house wins, the house will win. Otherwise, the casino wouldn't exist. Yeah, I didn't know that. That's great news, Vincent. And I bet he should be selling calls too, but he doesn't like to sell companies, so he probably wouldn't against his shares. I have a cousin who is a biomedical PhD, something like that. Anyway, who retired in his 40s to do nothing but sell puts. And he does it in bulk on companies that he knows and trusts and doesn't mind owning overnight. And he said sells them weekly. So, but you need a certain size account in order to do that. So the world of options is big, and the pitfall in options. So they say options are more riskier than stocks. I say it's an incomplete statement. They can be riskier. It depends on how you use them. But in the sold put to own shares, instead of owning shares, they are actually safer. So the scenario is, if I bought Rivian, what is this? If I bought Alibaba at here in shares, and it falls to 115, I'm down already $25 per share. If I, instead of buying shares here, I did my trade, sold puts for $3, then if the stock falls to 115, I'm not even at break-even point. My break-even is 112 after getting assigned. The put position itself would show losses, just like I showed you. This position in Zoom is showing losses. But if I don't panic and I truly meant to own the shares at that price, I should just let them stick me the price. I'll give you a worst case scenario, GRWG, which, by the way, was a winning trade. So this was a trade. I remember it. Sold put. It worked one day, and then the stock collapsed. It went in the money bad. And then it rallied, right? All pot stocks rallied, and then it fell back down, right? So Tilray, by the way, is catchable. So check this out. If I sold 2 contracts at 22.25, where is GRWG now? All right, so it's in a breakdown. It's at 19, whatever, $19. So let's say I stayed in that position and I did book it, and clearly I didn't manage it. This is a practice account. So the put itself, I collected $1.50 per contract. So $300 on that day went into my account. Now they're worth $1,000, but against me because I sold them. So to close the trade, I would have to book a $700 loss. I don't know what that is. My watch is talking at me, thinks I asked it something. So now I'm down $680 on an initial maximum profit of 300. So that's a 2.2 times. That's terrible. However, consider the fact it has 61 days on the clock. Let's say I wake up on Monday and they stuck me to 200 shares. It's $19 now. Okay. I'm in at 22.50. The maximum that could happen is that I'm down air math. What is that? $3 or $4 per share? $2 or $3. And then I have the asset. So instead of booking the loss, I would take the shares with the break-even point at 21, because I collected 150. The strike price is at 22.50. So my break-even point at 21.50, it's at 18 now. If I wake up on Monday, it's at 18 and they give me shares, I'm down 21 to 18, $3. So not the end of the world. I can immediately turn around and sell calls against them versus having to have bought calls, paid $500, and those calls are dead. There's no way I can recover those. They're dead, toast. If somebody didn't book it, they had the chance to book it because it spiked to high heaven. But anyway, so selling a put and getting, quote, in trouble shows a lot of losses here, but it's not that bad once you get a sign.
Hey, Nick, really quick here. I'm getting a question from the Q&A. This is I'm not going to tell his username,
John,
but basically,
that's funny. I have
he's
a lot
basically
of
saying, what would you do if you've been trading calls and puts and, you've lost a lot of money just with calls and puts? Is this a program that could help you?
Well, first I would stop doing what I'm doing and look into is there a systemic problem? Like if I don't, so here's one acronym that should help you. You should learn it. If in NT, so if you don't have no trigger, you shouldn't have a trade. But you're saying, Nick, I'm not a good chartist. Well, first of all, you need to not trade if you don't know the charts, because that's a new world where you need some charts and you can borrow the charts knowledge. But the T can stand for a thesis, no trade. So in other words, so no trigger, no trade, and no thesis, no trade. If I don't have a reason to take a trade, whether it's on the chart or a fundamental reason, and by the way, please, I think it's going to go up is not a thesis. Why do you think it's going to go up? Like I thought GoPro was going to go up because I had the eyeball thesis going. If you don't have something like that, if you just say, I think it's going to go up, I hope it's going to go up. I think earnings are going to be great. It's going to go up. Nope. Not a good thesis short term. Okay. So that's your first problem. Maybe that is what you're lacking. And also, when do you get out? When you take a trade, you should have an exit strategy. If I lose X percent, I'm out. Or if the stock falls below that line that I thought was going to hold, I'm out. Or if the stock reaches the first target, I'm out, booking profits. So I have to be able to book profits and book losses. Some people get crippled. Don't add to your position, especially in calls. Oh my gosh. I never add, almost never add, unless with a specific purpose for a period of time, saying, I see support here, I'm going to add and get out on the bounce or one more tick lower or something like that. Where otherwise, I'm just making my problem bigger. Averaging down is not a winning attitude. Only do it sparingly, like really sparingly and really on purpose. Somebody said I have a lot of losing trades. I mentioned 2 losing trades, I think, but they were wins. This one, GRWG, this is a practice account where I take the trade and I don't manage it in here. If that's what you're talking about, I don't manage it. I take the trade for the demonstration purposes, and they all delivered profits. I promise you that. Like GRWG has had immediate profits and then profits thereafter. Match was a huge win, an absolutely monstrous win, but it doesn't show it here because I didn't manage it. It shows a win, but it was a massive win. Zoom was when immediately Baba, we caught the knife fast. FBRX was somebody's idea in the chat room, and it was a lottery ticket, and that was a disaster. We got put stock, and Beyond bounced. And let me see here. Whoever did calls did not do well. Whoever sold puts, they did fine. Yeah, okay. Yeah, the paper trades is, I use it sparingly. And then because the problem with the paper trading is if I go, it looks great. You go to place an order. So if you don't know this, if you go to trade, not an order, trading. So let's say I wanted to trade this one, and I say, okay, I'll do one. And usually in real life, if it's a liquid stock, it's going to fill in the middle between bid and ask. I don't even have bid and ask here. I don't care. It's going to fill somewhere here, plus or minus 2 or 3 pennies. In paper trading, it doesn't work that way. If I'm selling and I go to fill it, it won't fill unless I go and give up all the profits to the bid or lower. So I'm at a disadvantage. And if I'm buying, they want me to pay up for it and go here. So it's not very realistic, and it's frustrating. So I don't do it often. It's not very reliable. So I track it and I share it as a table. That would be better, like I just showed you, like this table. This one is dynamically linked and it's live. All right, so positions don't really matter. All right, so we've been on for 2 hours and 20 minutes, and my dog is starting to give me the side eye. I don't want him to have an ASCII don't. Then what else do we have to do there? Rodrigo. Okay, so
it's all up to you, Nick. I mean, we're already over by like a couple of hours. So I mean,
okay, so
you want to give him, it's up to you. I mean, I know a lot of people here already know you from the chat room, and
I think we did enough tickers. I think we gave them enough. I want to leave you with a last chance plea to not looking at it as he's going to give me bulletproof trades. I'm going to give you the opportunity to develop your own process for the long term. And I want you to stay here until you become comfortable with it. And it's cheap enough that you can do that. I'm not saying it's cheap that it's 2 bits, 2 pennies. It's not. It's a good amount of money. But compared to what's in it, it's dirt cheap, and it's an insult from my perspective. But I don't take it as such because the opportunities are great. I can tell you that the people in the chat room are all awesome. And if I'm not there and somebody asks a question, somebody will go hunt it down and we'll bring them the link if there's a video or something. So my strengths are I've become super strong with the charts. I say that confidently, but not from Wall Street terms. I don't talk the talk. I can teach you about volume profile, which is the only actual metric I have there. This guy right there. They say price is truth. That's the only one you need to learn. First, you need to learn levels. Then you see, you get confirmation from where price is traded before, those little bars. And then the rest is up to just common sense and logic. No emotions. The anti-FOMO trade is here. Hey, whenever you can, Young, I would love to have you in there. The room is busy, getting busier. The deals there, Benzinga is striking deals left and right. By the way, they're doing some great stuff, the Benzinga folks. I don't work for Benzinga. I work with Benzinga for a long time. And they proved to me very trustworthy from me on my side. So I can just imagine what they're doing for you on your side. And the fact that it's risk-free because you get your money back, like, what do you got to lose?
Yeah, we are definitely adding a lot of upgrades to the chat room, movers tools. We're adding a lot of audio features, a lot of things there.
Yep. And if you're on Twitter or StockTwits, hit me. Twitter actually better, cleaner apparently. But anyway, I'm on there as Racer Nick, no K, RACERNIC.
Good stuff. Yeah, I appreciate you here, Nick. So
I love being here. I appreciate you taking your time off of your family time on the weekends to help me trying to grow the community. And the community is huge. And by the way, you don't have to be in the chat room all day, every day. You can pop in and say, what did I miss? Or what you can do is pop in the morning and get the scoop on the day. and pop in the middle of the day and get any trade setups and say, what did I miss? And if you have questions about your trades or your charts, or you want to look at a chart here and there, pop in and say, hey, Nick, you can direct message me saying, what do you think of this? Or I have a trade, it's in trouble, what do I do?
Yeah, it's a great community. Absolutely. A lot of the folks there have gone a long way from when they started.
Oh, yeah.
I've seen that.
Oh, yeah. And I saw that there were some technical advances on the chat room, so I'm excited about that.
Yeah, that audio thing is new.
Well, no, that audio thing has been there. I just haven't used it before.
Okay.
But there are other things that I got a link to something else.
Yeah, it's a new chat.
Yeah,
the new chat is
good.
built. It's in the final stages of development.
Yeah.
But guys, that's something we're doing constantly. It's not like it's like regardless. You pay today 78% off. You keep that for the next year, and all these improvements we're making. That's just part of it. Like we constantly do that for everything that we're doing here.
All right, so I'm out of energy. The energy drink is still in me, but I don't want to finish the can. That thing is, got a lot of niacin. I think it makes me itchy, so I will stop drinking. And hopefully I'll see some of you. I know that you touted a few people signing up. I know they trickle in the next few days, but
yeah, Alex joined. Omar says he's going to join when he gets to the.
All right, Omar. Yeah, let's go. Yalla.
Yeah,
Omari, Sherry. It's Cherry.
Omari. Yeah, okay. And I'm going to stay here, guys, for a couple of minutes, just answering some questions if you have about the chat room. Nick is getting back to doing work for the chat.
I have more work to do because I have to finish the write-ups for the gang and do some strategy. So my day is not even close to being done. Unfortunately, I'm stuck at the computer all day. I need another Sunday, but that's okay. All right, folks, I'm gonna log out and have fun.
All right, thanks a lot for joining here, Nick.
Yep.
Okay, guys, I'm just gonna stay here for a couple minutes. If you guys have any questions on Nick's chat room on the format, there is a 7-day money back guarantee period. Basically, everybody that is there is a full trader, full verified options trader, people trading different strategies, different assets. There's people that trade futures there, crypto, just equities in general. And of course, options, right? It's more than just calls and puts. It's, spreads, iron condors, butterflies, all that stuff. But you need to know when to use it. What's the right scenario for that? What are your risk implications? Risk management is a hot topic in the chat always. So if you have any questions, throw them out there in the chat. I'm going to leave the link here one more time, and I'll drop my contact if you do want to reach out, if you do have any further questions on it. Des Moines, no, it does not include that. But if you do want to work something out, just reach out. I left my contact there in the chat. Des Moines from YouTube chat. Yeah, you don't need a membership from Pro for this. No, it's separate. Crypto, the recording will be sent to all the chat members. So if you're a part of the community, pretty much you get all of this. You get all the resources, everything, right? All the sessions that he does on Sundays, which this was not the session. The private session is not, uploaded anywhere. It's just a recording that we do for the weekends with the members only. Shaw, maybe Nick can give you. I mean, Nick wrote a book. Maybe he could give you the name of it. Saeed, no, we don't offer payment plans, but reach out. Maybe there is something that can be done. You can reach out at this contact here. I'll leave below in the chat. 1297. 1297 is until midnight. However, I don't know until when the laptops will be there. So, I mean, if you want to risk it and wait till midnight, go ahead. But very likely there will not be a laptop at that point left. So, yeah, that would be the deal for tonight, for the day, Jerry. Sherry, I want to be part of this company. I have been inspired. Yeah, we have that effect on people. We go really hard to help you guys to make these sessions possible every day. I mean, we're doing these things pretty often, and we do it for you, right? I mean, that's the whole purpose, right? To help you guys, to help retail traders, right? To hold your hand from the beginning to the end zone and giving you all the tools that you need, right? The tools, the knowledge, all these, intricate chat rooms that we've been building here from scratch with all these features and all the things we're adding to them. So yeah, I mean, we are inspired, to help you guys. So it's a mutual thing. It's a mutual thing, Sherry. It's $12.97 with or without the laptop. It doesn't make, like, taking it off, it doesn't make a difference. It's just like a courtesy gift. It's like, something we want to give you as a courtesy. Yeah, Sherry, we'll see you in the chat room, okay? Great energy. I love it. Saeed, I'm putting the link there in the chat for you. Taiwan, Tiawan. Yeah, we're not day trading options in the chat room, but I mean, look, if you're up 100% or 50% on something, it might be a good idea to sell. Yeah, don't wait too much to sell. So the whole course, Joe Linares, this would be for the full year, but it's not, I mean, it's ongoing because we're live trading. The education is just sprinkled left and right on everything that we do. And that includes trade ideas, that includes market updates, that includes digesting the economic numbers and how we trade around them, looking at rates and the Fed policies and, things like that, that do impact the market, right? You have to be on top of all these things. But look, if you're not, it's fine because Nick is, and he gives you everything ready, good to go, and a golden plate ready. So it's very easy, right, to trade right next to somebody that's willing to be there with you literally all day trading and sharing his thoughts about the market nonstop. That's very helpful for a lot of people. I don't know, Free Franklin. I don't know which indicators you might want to ask him in there in the chat because I know he's not really a big indicator guy. More price action, which I like to do it that way as well. Less indicators, the better. Steve, I can work something out for you. Okay, I can work something out for you. Dimon just signed up. Looking forward to it. Nice, Dimon. I've seen you around. Seems like you're learning a lot. And of course, just want to give you the official Benzinga welcome, Des Moines. That's awesome, man. I always have the chat room open for Nick. There's no, like, it's every single day because I get the market updates and everything and the trade ideas. So, you just always have it there on the light. It's just one of the great tools that you have, right? Premium tools. It would be Nick for sure. So welcome, Des Moines. Yeah, football. Yeah, there's a couple good games later. Absolutely. All right, let's go to the Zoom chat. This is for a full year, Jerry. So 12 months from when you sign up. So if you sign up today, it'd be 12 months from today. Sam, make sure to give us a call tomorrow in the morning if you want to just get an update on your laptop. Does this subscription cover options or all forms of trading? Well, options does pertain, like these are derivatives and there's different types, different ways that you can trade them. It's, meaning to call, puts, buying, selling, spreads, iron condors, different types of spreads. So there's a whole, variety of things that you can do. But the first thing is to know what they are, the risk implications, to be a complete option trader, a complete options trader. Otherwise, you're just a put and call buyer. And typically those are the most volatile accounts. Those are the accounts that are more likely for blowout. It's happened to me as an options trader. So you definitely have to twitch your strategy and use them a certain way. So knowing all the different types of option strategies, that's golden. That's what you need. Like that is your goal as an options trader. You don't want to just be stuck buying calls and puts. Okay. You don't. There's a lot more to it. So you will learn all of that, Deepak. So it covers everything related to options. And obviously we cover, options, it's just the way we trade, right, around. But the content of what we are trading around, that's where the juice is. That's where everything is, right? The the digestion of the news, the explanation, Nic pretty much doing all of that work for you, giving you trade ideas that have already been filtered by him. He's done his analysis and all that stuff. So you just get everything, good to go, delivered. I'm not sure, Alex. Just call us in tomorrow. You can do that and you'll get that sorted out. Kenna, we don't have an option. I'm sorry, we don't have a payment plan, but just reach out and maybe there might be something that can be done. There's no promises, but we'll see. Just call the number on the chat Monday. Antoine, the chat room is all you need, to be honest, because from there you will have access to the live sessions on Sundays with Nic. You will have access to all of these educational sessions that Nic is doing that are just for chat member access only. These sometimes we go like 4 or 5 hours. It's just, we're overloading you with great information so that you can go ahead and look at it whenever you have time. So yeah, you do have access to all of that as a chat member, of course. Jeremy, it renews at the same price. So the original price, if you look at the checkout, it's like the original price was like 6,000. So right now you have 78% off until midnight, and you do keep that discount at renewal. So it is a lifetime discount. It's not going to go away. It's not like one of these 1 year complimentary intro discounts. It's basically, forever. You always have that price. I don't know if you guys can see that, but that's basically the chat room. This is how like Nic showed you his view, but this is the view that you would have. So you see that tool? There's a tool at the top right that we added. That's a very recent tool, stock movers. This is going to make a more fruitful conversation for you in the chat room, right? You can separate them by gainers or losers. These are tools that we are building here at Benzinga Inside. And it's just the first one. There's a lot more that will be coming, and they will be added, probably around here. There's a new chat design, right? This is not the new chat design. It's in final stages of development. But in the new chat, you're going to have a lot more features, a lot more things there that you'll be able to do. And you'll also have all these other tools that we're adding as a courtesy, just to give you a more engageful day full of more trade ideas, possible trade ideas, possible trade setups worth taking a look at. And, we'll keep adding some more things there, right? You have charts here in the bottom with earnings, EPS, all that stuff. So this is just the beginning for this, right? It's just the beginning, but you will keep all of that. You'll keep that 78% off for the entire, forever pretty much. And right here in the checkout, this is the special Black Friday offer. So this is just for Black Friday. All right. You have 10 hours here left. If you see a laptop, if you see this laptop there, that means that you are getting a laptop. Okay. If you don't see it, we're out of laptops. 7-day money back guarantee there. Very simple. Boom. You're in the chat room. Then you'll be right here with everybody else, looking at all the videos, all the trade idea setups that Nic is putting. So what is an options trader, Joe? That's what Nic is. Nic is an options trader. Richard, this is live, man. This one is live. I promise. We're here. So yeah, I mean, I can't wait for Monday to start. I do want to make a couple adjustments on some portfolios, but we'll definitely make sure to get that. Nic does break it down big time. Richard knows it. I mean, this is a sneak peek of what he's doing. But I mean, you can see in the chat room, he's constantly putting, trade ideas, videos, 125 tickers. So if you missed the session today, right? If you missed the session on Sunday that he has just for chat members, right? You're able to access it right here in the chat room. Why? Because we are nice enough that we post this in the chat room. Go ahead, click on it. 1 hour, 50 minutes. There you go, right? Happy Sunday. I mean, it's amazing, right? That you get this much hand holding, this much coaching, technical, fundamental, all this stuff. It's just pretty great to get that for the price. I mean, come on. Look, another one, strategy for the week ending in 11/26. Full weekly strategies with full daily updates. This is hand holding to the max, guys. If you're trading options and you're starting, this is it. This doesn't like it. Something like this did not exist when I started. And you had to go the tough route, man. You had to take the losses and pay that tuition to the market. But you can pay a much more affordable tuition here today so that you avoid those losses, those swings, blowing up your account. Everybody I talk to, it's happened to them at least once. So, and I've talked to thousands of traders like around the world. So it's very common. Don't think you're golden. Like it can happen to anyone. Antoine, yeah, he will do all the charts for you. So if you have a question about any specific chart, he's going to go ahead and give you a detailed video explanation. He's going to tell you pretty much everything that concerns him, right? As far as that trade for that stock. So in that video, the 1 hour 52 minute, you can request your tickers. Okay. It's right there in the chat. Right there. You can read it there. Give me your tickers early today, if possible, here, right? You click on that form, right? You put in your tickers, and then he goes over the tickers in the session, and you have the link to join here, right? Sunday charting session info. It's right here. Everything's in the chat room. Everything is in the chat room, okay? You have the link to join. You have the form to put in your ticker if you want him to look at it, and everything is from an options trading perspective here, right? So, and then he will leave notes as well. He'll put notes on every single ticker. You can see right here, this one was like 125. I mean, that's pretty short. It's pretty small for what he's typically doing in the chat room. Now we call it a chat room, but it's really like a trading room, right? It's a community of members. It's a great community. Once you get in there, you'll see it. A lot of people, always are joining here from all places of the world. So it's interesting. And Nic is pretty much leading the way, right? Giving you all the setups, letting you know, hey, maybe stay on the sidelines right now. We're trying to read the market. It's always trading with a plan. That's what it all comes down to. It's pretty fun, just scroll through all this stuff, scroll through the content, the questions, the knowledge that you are getting here, right? And this is a verified, trusted community. This is not like Reddit, this is not like Wall Street Bets. This is not like following any of these like, YouTube kids. This is, following a professional, somebody that's been doing this for decades consistently, profitably, more importantly. Ranked, I think, number 5 on tip ranks for options. 90% win rate. I don't know what more do you want, to be honest. That's good enough for me. So he's definitely made an impact on my options trading. I'll tell you that. So Antoine, Nic will show you how to do that and a lot more. Yes, it's all part of a bigger picture here that we're trying to do to help you guys as options traders. It's not just about showing you what does a call mean and what does a put mean and what's the difference. There's a lot more that goes into the markets that you are getting included here, not just how to trade an option. Rob, how many recommendations should I expect a month? All right, guys in the YouTube, I'm posting the link there. Sorry, I got carried away with Zoom. There's a lot of questions here. Ben Steeds, I posted the link for you to sign up on the chat right now. That's the link. That's going to expire midnight. Just make sure you get in there and you look at that laptop. If you're in and you see that laptop, get in while it's there. Right now, you have 78% off Joey Linares. Okay, Rob, how many recommendations should I expect per month? I mean, on a daily basis, you should expect 1, 2, maybe more, right? The setups have to be there. We're not trying to force trades down your throat. That's not helpful for anybody. We want to give you the right setups, the right trade ideas, and you can't. It's not like 2 of them will happen once a week. There's no format schedule for the market to react that you can say. Like once the setup is there, the trade idea is released by Nic. So when the setup is ready, and sometimes you're going to get several a day, right? Sometimes you'll get 1 a day, but we're always looking at the stock market. We're always looking at stocks every single day. It's very active. It's very active, man. Like people, and there's people with different time zones. So it's not like at 5 p.m., we shut it off. Like people are there talking going over trade ideas and setups. Nic will pop in there as well, here and there. Like this is his life, okay? The chat, this is Nic's life, the chat room, pretty much. So you get all of him, you get all of Nic. I know you guys love Nic, so you'll have all day to spend with him. That's pretty cool. Jerry, I just joined. Okay, send me an email, Jerry. Somebody said they had a similar issue, but they just refreshed it and it gave them access right away. If you can send me a quick email so I can see if there's anything out of the ordinary there. But it seems to be working for everybody else right now. Could just be a refresh issue. But thanks for joining, Jerry. You're gonna have a fun time there, and great learning experience. It's a must. It's a must. Options traders are the wildest out of them all, right? So you definitely have to put some structure into that trading career, because otherwise you'll just be chasing calls and puts until you blow up your account. Antoine Johnson, I mean, it's up to you which broker you want to use. You're welcome, Emily. You're welcome. If you ever, want to if there's something that I can do maybe to work with you, let me know. You have my contact is there. I can be flexible to a certain extent, with helping you, because at the end of the day, it's great. It's a great experience to be trading with a community, and I'll be willing to help you if I can, for sure. I agree, Glenn, for sure. I mean, it's more than an education. Like, you can make an income as well. So, um, I don't remember the last time I went to school and they paid me for it. So, Greg, no, this does not include Benzinga Pro. No, but if you do want to take a look at that, and you're looking into that, call me anyway, right? And maybe there's something I can work for you, but it's not included. It's not included. Victor, if you have no experience trading options, this is for you, no doubt. Like, this is where you need to start. Don't go to Wall Street Bets. Don't go to any of these places, please. Don't chase unusual options activity. Learn the way you should, right? With a structured education on learning the concepts, right? Don't overcomplicate yourself with all the stuff. We've all been there trying to figure out these, complicated things they're trying to say, and ultimately, it doesn't have to be that way. And Nic really makes everything very simple so that anybody can understand, no matter what level you are, no matter if you're a true beginner, if you're just learning. Some people are there just for learning. They're not even there to trade. They just want to get the concepts right. Maybe they haven't gotten their brokerage approval for trading options, because I'll tell you what, they're getting tight with that, right? Right now, if you try to open like an options trading account, they will ask you questions. They will ask you, there's this one guy that told me they asked him like 10 questions about options. He didn't know any of them. He's banned from trading options. He cannot trade options with that brokerage. So some people are taking this course just to get educated so that they are approved to open an options trading account. Okay, so there's people here that are doing it for education, people that are doing this for income, people that are doing it for both, people for the experience as well. We have advanced options traders as well that don't want to trade alone, right? Because you're at a disadvantage. You in a room by yourself trying to figure out this whole world, I mean, you'll go crazy. You need a community for many reasons, and a good one, right? So, I mean, everybody here is a verified trader. It's not like a fake account. There's no fake accounts or trials, or there's nothing like you have on Reddit or any, stock tips, all these things. So it's great because you have a community that's focused on learning, and, just a community working together, right? So, you're welcome, Greg. All right, guys. So I think we covered all the questions here, right? If anybody has any last questions, let me know, because we're closing the stream here like in 1 minute. Crypto, call the office tomorrow. I'm not sure. I'm not familiar with that. Claudio, just sign up. That would be something different. That's not the options inner circle chat room. And all those questions, Greg, that would be by email. That's something that the email folks here will be sending out. All right, guys. So it's been a great Sunday. Thanks for being here with us. Thanks for joining us. And Nic Chahine, definitely appreciate your time here and effort. So if you have any other questions, reach out. I'm leaving the contact information there in the chat on YouTube and on Zoom. You guys are welcome. Have a good Sunday. All right. Get ready for Monday. It's going to be a big week. We're on it in the chat room as well as a community. So if you want to try it out, try it out. 7 days money back guarantee. Just tonight, though. Just tonight. And the deal expires at midnight. So you have some time there. The laptops, I don't know. They might run out before. So if you have any questions, let us know, guys. Thanks for being here with us and have a great weekend, guys.
never used Robinhood, so that's the caveat for you there, Reza.